What if I told What if I told you you could get a copy of the Edge Finder completely free thanks to this live stream's sponsor, 8cap? 8cap is a regulated brokerage that has a special offer for viewers of our channel here, and I wanted to tell you a little bit about how this offer works. There's really only 3 simple steps to setting up a free copy of Edge Finder through our partnered broker, 8cap. Step 1 is you have to use the link being dropped in the live stream chat or down below in the description to create a new account. Step 2 is go to this link, scroll down on it, and you'll see the requirements that you must make in order for 8cap to essentially buy a copy of the Edge Finder on your behalf. Once you've created an account and deposited the required amount of money in order to qualify for one of the offers on that page, step 3 is to simply contact 8cap and or A1 Trading's team. On that page, there will be information for that. And then we will be able to essentially grant you access to our tools completely free, bought and paid for by your new brokerage, 8cap. Unfortunately, 8cap does not accept US traders. However, if you're outside of the US and interested in exploring this offer in more detail, again, like I said, we'll have that link in the live stream chat or in the description down below. Alternatively, you can just head over to a1trading.com/8cap. Thanks to 8cap for sponsoring today's show. Now back to the content.
Good morning, everybody. Welcome back to another live stream. Hope you're all doing well. Happy Monday to you. I was in Chicago this weekend for a wedding. It was beautiful. It was lovely. Chicago is a really nice place. Alan from the stream, you guys, if you are regulars, you know Alan. He's on here pretty frequently. He's actually from Chicago, and so, or at least he's lived in Chicago for a number of years. So I asked him for some recommendations on where to eat, and man, Chicago's really cool. It is a very, I've never been there before. Very, very, you know, in the summer especially, really nice. Anyways, we are back. Some crazy updates, of course, with the Middle East stuff. We have a tentative end to the war, which is obviously a good thing. And so we have some interesting price reactions. I am no longer in the short position, right? We had a huge rebound in precious metals, taking profits on it, moving on to the next trade. I'm still a little bit cautious on precious metals because despite the end of the war situation, part of the reason, you know, gold and silver had already kind of been in a funk going back as far as, you know, January and February. You know, gold and silver had already seen a sharp drop off. Inflation has been on the rise, and oil prices were elevated even before the Strait of Hormuz stuff. So when it comes to precious metals, I'm still a little bit cautious. However, from a short-term perspective, this is a strong catalyst for price to move higher. So we are seeing a continuation to the upside here that I'm going to go ahead and be out of that idea and move on to the next one. So taking profits on silver. Gold is also interesting. You have price surging today, up 2.9%. Huge up move day for the metals. So if we scroll here really quick, from a fib retracement zone study, we've got a move from the high down to the low, price retesting here, surpassing the 38.2, breaking and gapping higher today. For the precious metals, the question now becomes, do you get this sort of gap and go continuation type move this week, or are you going to fade the gap before deciding where we go next? I will say I still do lean a little bit more preferential to the bearish side of precious metals in the here and now. If I take a look at some of my studies here, S&P 500 is still in neutral territory, although Dow Jones is getting some strong readings here. Thought this was worth mentioning. We saw institutional buying going on the Dow Jones. 4-hour and daily chart uptrend intact here. Seasonal trends look good. Bullish activity on the COT report. Economic growth looks reasonably healthy. Jobs market data also looking better than expected. And inflation came in line with expectations. So we have an improving story, especially with the geopolitical catalyst kind of being walked back with the Middle East, Strait of Hormuz being open, or I believe it's in the process of being opened. I'm not exactly sure how that is playing out. But the point is we have a tentative deal here. The war is over. And what now? That's the question. Do stocks rip to new heights? Do they continue their rally? Well, to be fair, I think the path of least resistance for stocks is probably higher. You have what is likely to keep oil prices for now under control. I mean, we're down 5% today on oil. Oil is breaking the meaningful level that we have talked about for a while, the $88 a barrel mark. So you have a move lower in oil. This is good for the inflation story. This is good for stocks, right? Stocks, of course, love lower inflation. And so all of this to say, it's also kind of a weakening thing for the dollar. You have a strengthening thing for precious metals, which have been in a funk due to a strong dollar. I'm not fully willing to go the course of saying now I'm bearish dollar or now I'm bullish precious metals. But I certainly think that losing the catalyst of uncertainty to an extent, there's still uncertainty, right? Because you could still have things go wrong. We still have Israel is a big question mark in this situation. So all of that to say, I do think that this is a significant improvement in regards to the bull case for precious metals, for example. But I'm not fully willing to say like, oh yeah, no, and now we rip to new all-time highs. I don't know that I'm quite there with it. That being said, in the interim here, oil trending lower, breaking significant support. This is certainly a good day for the oil bears and a good day for the gold and silver bulls. How are retail positions looking? We'll take a look at that for sure. Great trade, Nick. Well done. Great. Thank you very much. I appreciate you. Yeah, no, I had no idea. Obviously, we never know where markets are going to go with certainty. I shorted silver, did really well overall in this position, and it's showing now signs that trade's over, right? I don't necessarily mean, like, it doesn't necessarily mean that I'm going to turn around and be now bullish on precious metals, because I don't think I am. Like, if I take a look here at gold, for example, if I take a look at gold from my heat maps perspective, I think you're getting the pop that you would expect on the announcement of the war ending. Oil lower, gold and silver higher. That makes sense, that headline. But then the question is like, where are we going from here beyond just today's pop? What is the next scenario for gold and silver? Well, for me, the path of least resistance would then become still bearish overall, but the sharp bounce here is sort of as expected, I guess. So with the jobs market data coming in better than expected, inflation still sticky. I mean, we still have 4.2% CPI, PPI at 6.5%, PCE at 3.3%, and yields that, I guess we'll take a look at yields next. You still have a circumstance in which, okay, the dollar story still seems healthy to me until you start losing economic growth stats or inflation meaningfully drops jobs market data. Like, if I'm just following the trend right now, the trend for me would suggest I'm still going to stay bearish precious metals, but I think we very well have a little bit of bounce room. Like, we were oversold. We were tagging a long-term level of support on gold around the 4,100 level. Like, I still kind of lean in the favor of thinking, okay, well, if gold rallies on up to, let's say, 44.35, this sort of area, and let's actually get down to the 4-hour chart. I think that's the better way to do this. If I'm drawing fibs from the Fibonacci retracement from the high to the low here, the 43.80, 43.75 area, the 44.40 level, like, this area starts to look like, okay, you've had the bounce, now what? And I generally still lean more in favor of thinking gold and silver are going to continue where they started this year, which is a downtrend. Like, the dollar is still strong. Now, again, if the dollar loses some strength, like, let's say we go back to our story here, and let's say that jobs market data starts to come in really weak, and that weakens the dollar, that would be a positive factor for gold. So I'm open-minded to whatever the macro is telling me. Right now, the macro is still telling me, okay, Strait of Hormuz closure now being turned into an open one. That's an improvement. That probably spikes the price of gold, silver, and sends the dollar lower in the short term. But then where are we left with? Well, we're still left with US economic data coming in stronger than expected. That's bullish dollar. Inflation, which is still high, bullish dollar. And jobs data that has been better than expected recently, bullish dollar. So what I'm basically thinking is, I think you still see the bounce for a little while here. I think you have a little bit more strength in gold in the short term. And then I think right now, the scenario would be, I think gold then starts to roll over again. So that's my opinion. I could be dead wrong on that. Please, I'm just a guy on YouTube. I've traded for a long time, but nobody, and this is one thing that new traders have to learn the hard way. Nobody on YouTube, nobody on television, nobody on Twitter, Instagram, TikTok, no one can tell you with certainty where markets are going to go next. Good traders are making educated guesses, and they're risking small enough that if they're dead wrong, they're not going to get hurt. Okay. So with gold and silver here, I still think that the general trend is to the downside. And as I look at it coming into the 61.8% retracement, I am personally willing, not telling you what to do, but I am telling you, I generally think like that's a spot where I think sellers come back in. Maybe we fill this gap, and maybe we actually continue lower off the idea that rates are not going to likely come down very easily, even with the Strait of Hormuz situation over, right? I hope that makes sense. That's kind of my take on precious metals here this morning. Is I am a little bit more of a fan of fading the rally rather than trying to chase the rally. Again, not just trying to go with the macro that I'm seeing right now. We have a downtrend on the daily. If we apply our moving averages, we've lost the 200-day moving average. All of our moving averages are generally trending lower. I think as you see this bounce, my personal take on it is I think that we more likely move lower than move higher. But as always, I'd give it a 60% chance. This is my own numbers. I think you have a 60% chance of moving lower and a 40% chance of moving higher. Okay. I should do this more often because I think it helps to map out a little bit better what we're talking about as traders. What the illusion of a new trader is like, oh, Nick said he thinks it's going to go down, so he's going to be like 90% right? No, there's too many unknowns. There's simply too many things you can't know about what's going to happen next in the markets to be 90% correct on a one-to-one basis, right? Nobody is. No, not one person. There's people who will tell you they are, but they will never show you their trading account, right? They'll never show you their stats. They're never going to prove that. They're just going to say it, right? So I'm telling you candidly, I think about a 60% chance that gold continues overall moving lower. But if I'm wrong, which there's a 40% chance in my own mind, based on the macro, then I'm going to manage accordingly. I'm not going to get wrecked by that, right? Just like with the silver position, I shorted over the last few weeks, caught this really nice move lower. And at this moment, sure, in hindsight, Nick, why don't you close it right there? Why didn't you close it right there? You should have known it was going to bottom right there. Well, you can't know things with any certainty in markets. My thought process, which I'll stick with because I can't tell the future. No one can. My thought process was, okay, if we see a bounce, we should probably hold around the 68 to 69 level. If we hold that, I'll stay in the trade. If we can't hold that, then I need to get out of the trade. So sticking to my very binary logic there, we haven't held it. So it's on to the next position for me, right? So I hope that makes sense. But that is the thought process behind the silver position, behind looking at a possible gold position. And I do think, you're kind of sitting at a pretty big spot here currently, but I also really like this zone right here. So I'm generally bearish of gold. If gold can continue like pushing higher today, I am still thinking that you could see some downside, some continuation. I think this fade could come in on gold and silver. Maybe I'm dead wrong. And if I am, I'll manage it accordingly. I won't lose a lot of money. I will manage the risk. So check this out. Other update here, S&P 500 blew past that 61.8% and 50% retracement level. If we close here today, something similar to this, then I think we most likely move higher. Really solid price action from the S&P 500. Huge gap up. The question now becomes same story for gold and silver. Do you come down and fade this, right? Stocks have some of the same and some different trials and tribulations to precious metals. What do they have the same on? Well, inflation is still sticky. What do they have difference on? Well, stocks have crazy good earnings right now. It's a story that I think I just do not want to fight, right? I'm not willing to short stocks. I'm not willing to bet against the rally because this thing is in a monster overall upward trend. Again, stocks are in favor right now. Gold and silver are not in favor right now. Maybe that will change, but right now, you look at the NASDAQ, this thing's a ripper, right? It wants to keep going and going and going. Same thing with the S&P 500 and even the Dow Jones joining the party here. Now, my concern is that you do have some unfilled gaps that could get tested, like on the, maybe on the intraday, maybe within this week, you see some sort of give back, some sort of, et cetera, et cetera. But generally speaking, the bulls have won out, I would say, in the price action here recently. S&P's up 1.2% today. NASDAQ's up almost 2% today. Solid price action there. The VIX is dropping by 6% today. So you have volatility contracting. And again, all centered around Middle East stuff, kind of what looks to be resolving for now, which is, let the party music go on type of stuff. And that's the other thing is, oil's also down almost 5% today. So you have this circumstance where it's like, okay, the recipe for equities moving higher is there. We also said we're going to take a look at yields. Look at yields. They are lower. This is a spot I'm very curious to see how price reacts to in the bonds world, because if you're looking at this, you have US 10-year yield back at 4.45%. This is a critical level of support. And I think this is the market you really want to watch, in my personal view. If you're someone who watches the dollar, if you watch gold, if you watch silver, if you watch NASDAQ, if you watch S&P, whatever you watch, this chart matters quite a bit. The 10-year yield ultimately is sort of the gatekeeper in terms of liquidity, in terms of borrowing rates, etc. By the way, cryptos are, look at that. You've got some crypto action going on. But even still, I mean, Bitcoin, you've got a nice little rally here. That's a 10% rally. It's not nothing to ignore, but still crypto kind of in a funk for in its own right. 10-year yield though, I think if you're looking for the bull market to continue, NASDAQ, S&P, et cetera, you probably do want to see yields start to kind of break ranks and move lower. Because my concern here with yields would be like, okay, you come down to this area. If you find buyers here, well, let me say it a different way. If you see people willing to short bonds here, because remember, if they short bonds, yields go higher, right? So if you see that sort of price action again, it poses a threat to equities. It poses a threat to precious metals, et cetera, right? So keep a close eye on this. I do think, you have 2-year yield also moving lower by the most here of the curve, suggesting, interest rates a little bit more likely to come down here today, but really not too meaningfully. I think where the prove it moment is going to be is in the subsequent inflation reports, the oil supply on the market. If you start to see things clear up quickly in the Middle East, yes, oil coming down, oil staying down and trending down for a while would be very positive equities and very positive inflation, right? Meaning inflation comes down. By the way, if you guys are enjoying the stream, do me a quick favor. If you could hit the thumbs up button, subscribe, follow wherever you're watching. Thank you for being here. We've got 360 people watching between all the different places we are streaming. If you could, like I said, support our show. Also, if you are interested in trading with a prop firm, we've been consolidating a bunch of awesome offers from our stream sponsors. If you scan this QR code that is below my camera, it'll take you to something so cool. And can I show you guys something? We have worked tirelessly to build something new on our website. If you head over to our website, a1trading.com, we have a section on our site dedicated to brokers and prop firms. Check out this new tool, okay? So if you head over to our site, Julie and myself, we've been working with all of our sponsorship work stuff. We've just been crazy busy on the website. We've been consolidating some of our offers with various prop firms or brokerages. If you're interested in trading with a prop or a brokerage, scan the QR code that you see below my camera here, and you can explore different offers from sponsors that support our work here. So specifically, let's say that you are interested in a two-step 100K account and you trade Forex and CFDs. This new page that we're working on basically allows you to compare some of the different sponsors that we have on our show. So in this case, you can see Ola Prime has like a really good discount, especially with our promo code there. You can, again, these are referral links. So transparency matters here. You're supporting our business. You're supporting our streams. You're keeping the lights on for us if you decide to help out and trade with a prop firm, that we have listed on our site. So check them out, do your due diligence, see if they are right for you. We also have so many different things that are available on our website that you can check out for yourself. So again, scan the QR code below my camera here if you want to get taken over to the website and explore some of our tools that we think are going to be helpful to traders looking for better discounts, better offers with prop firms, etc. And also, just to finish my round of plugs here, if you're interested in trying out Edge Finder, I will drop a link here in the live stream chat really quick to where you can sign up for a trial plus free course to Edge Finder. So there you go. So there's a trial information, plus you get a free course with that as well. That's linked in the live stream chat as we speak. Guys, up next, we have James Lane taking over the stream. Of course, Elite Traders James is going to be taking a look at some markets with you guys here for the next 30 minutes. He is, of course, highly technical, but also fundamental as well. He'll be going through macro fundamentals, technicals, charts he's watching. He's pretty diverse in what he trades. So he, like myself, he trades all sorts of different pretty cool stuff. NASDAQ, S&P, currency pairs, dollar, etc. So stay tuned on that. Real quick, we're going to play this quick break, and then we have James just after this. Stay tuned. If you are a swing trader and you are looking to get funded, then check out today's video sponsor, Ola Prime. Ola Prime has a challenge built deliberately for swing traders. Check this out. The Prime Challenge offers the ideal setup for swing traders with leverage up to 30 times. They also allow news trading. Weekend holding is also allowed. They offer up to 95% in rewards, and they have a 100% challenge fee refund available if you are able to complete the challenge. I know that a lot of people who watch these live streams tend to be more swing trader focused. So when looking for a partner to sponsor today's show, Ola Prime stood out as a perfect candidate. If you'd like to check out Ola Prime for yourself and get a live stream discount, then check this out. Simply use the promo code A1Live, that's A1 Live, for 35% off any of their challenges. As always, make sure to do your own due diligence to see that this is in fact the right firm for you if you are looking to get funded. All the information will be now dropped in the live stream chat or in the description down below. Now back to the stream.
Hello guys, sorry I'm just fixing my camera, I forgot to do that before. How's everyone doing? Happy, what day is it? Monday. Happy Monday, everyone. So what's going on? We had peace deals today or last night. So whether this will go through or not is anyone's best guess, but I think it was the 18th or 19th of June, so pretty soon. We are expecting a peace deal to get signed in Geneva. So on the back of that, yields are coming down. So we can see the 2-year yields here are on their way down. And I think there's some interesting trades we can look at, specifically actually on gold and silver. So I am looking to get preemptively long. I've got a YouTube video coming out later today, actually covering gold in a bit more detail. But I do think that we are starting, I'm not saying we are 100%, but we are starting to see the emergence of a new environment that is a bit more favorable for the metals, specifically regarding the yields. Now, just while I'm on the topic of gold, I need to clarify: it's not a smooth run. It's not a case of, oh, the war's ended and now gold can rally. We've still got the Fed that has hikes, at least a hike priced in by the end of the year. And if we check the edge finder, we are still seeing the hard fundamental data is still very negative for gold, regardless of the geopolitical landscape. So we can see technicals bearish. Institutional activity on the previous release is bearish, economic growth is bearish, inflation bearish, and the jobs market is bearish. So I'm not going to be, massively stockpiling gold right now. I'm not going in heavy. If we get the pullback towards the fib, we fill this gap, I'm happy to take a little bit of risk and attempt a long position from this low. I think we spoke about this last week actually, but I do think this is maybe, and a big underscore on maybe, a very good buying the dip opportunity on gold if obviously everything starts to align. But again, we'll have to see. So that's a loose overview there. Added to Euro Aussie, very nice. Unfortunately, I did kind of miss the entry because it didn't come down fully to my 50% retracement. However, I am watching. So if we can continue to see, bullish momentum, I'll happily enter a position similar to this, basically, maybe after my segment here today. But yeah, I still really like the Euro Aussie. However, as we discussed, I think last week we discussed Euro Aussie. The problem is there isn't really anything to warrant going long on the edge finder. So, excuse me, my thesis behind going long Euro Aussie is more based on just an unwinding of the Australian dollar and the sort of advantage that we saw by the RBA fading. Obviously, they're going on pause. We did have a hike by the ECB. The ECB is not on a hiking cycle. I need to be very clear about that. However, they do seem to be on more of a wait and see approach. It's not a case of we are going to hike or we are going to cut or we are going to hold. It's more we need to just wait and see. It very similar to what we experienced with Powell. But yeah, on the edge finder, we're really not seeing too much to warrant it at all. It's got a 0 score, but given the downturn we did have earlier this year, I think a little bit of a mean reversion play is definitely a valid idea at this time. So that's currently the standpoint I've got there. I think dollar CAD is still a very good market to want to be a buyer of. So although the dollar is seeing a little bit of downside again on the back of the peace deal talks, I do think we are going to see the dollar CAD continue higher on a relative strength aspect. So with oil here, so we can see crude has taken a real hit, and we're actually approaching I'll be honest, quicker than I thought we would, starting to approach the pre-war prices on gold. Sorry, not gold, oil. So on the back of oil weakness, what do we expect? Well, Canadian dollar weakness as well. So I do think that will be a pretty nice environment for dollar CAD longs to continue. But again, it's a little bit elevated here for me to really warrant doing anything. So I'm kind of just sat on the sidelines here. BTC on a bullish stance. Yes, I would agree. Bitcoin has a pretty good idea of being a buyer at this time. So again, last week we were talking about all these markets and we were talking about Bitcoin. I just said I didn't see a world where Bitcoin is bullish. Now, obviously, that's changed because we've had headlines change and the environment's changed, or at least seeming like it's going to change. So we've got an absolutely beautiful rejection off this weekly support level here. I think actually this is probably, very textbook type of rejection. Wick to the downside. Excuse me, last week's bullish candle, and now we're continuing bullish on this week's candle so far as well. So if you are a Bitcoin bull, I'm not really a Bitcoin trader, crypto trader at all, but I wouldn't mind attempting, obviously it's a weekly time frame, so you'd have to do your own research on this one, but something along the lines of this, buying off the weekly support, and basically taking more of an optimistic approach. Obviously, we've had a lot of twists and turns in the Iran situation. Peace deal, no peace deal, da-da-da-da. Now it seems a bit more official. It seems like it's a little bit more set in stone. Of course, anything could happen, but I would be willing to take more of an optimistic view at the moment. So yeah, I think Bitcoin bullishness is a little bit more defensible than being short at the moment. Thoughts on dollar Swiss? That's a good question. I don't really have anything for dollar Swiss. I think the Swiss and the dollar are not really fantastic right now. I'm still bullish on the dollar, but not as bullish. I'm more short-term bearish, just so we get a little bit of the war premium getting priced out as we see yields coming back down as well. So there is that aspect, but yeah, I just don't really see much here. So actually, let's see what the edge finder's saying first. Let's just be sensible and do our analysis. So dollar Swiss is actually getting a bearish reading of -5. Generally, I like to avoid -5 just because it's too close to neutral. But if we just dissect what's going on, so -5, technicals are bullish, job market's bullish, everything else is bearish. So maybe you would want to take a little bit of a bet on this one. The downside is the H4 is very bullish. So depending on what time frame you trade and obviously your own strategy, there might be an argument of going short here on the daily. Rejection of the 200. We just had another rejection of the 200, or a false breakout, whatever you want to call it. So maybe something along these lines. Stop loss above the double top here, and a take profit maybe just at these lows down here. I think that's pretty reasonable. It'll give you a nice 1 to 2. Very sort of bread and butter type trade on a pullback. James, what I think of US dollar pairs right now is that US made an agreement with Iran. They did, yes. If you want, I can give you. So here's the analysis. The US and Iran reached a framework peace agreement over the weekend, scheduled to be signed on Friday, the 19th of June in Geneva by US VP Vance and Iran's parliamentary speaker. I don't even want to try and pronounce that because I'll probably get it wrong. The deal immediately ends the US naval blockade, reopens the Strait of Hormuz toll-free, and halts military operations across all fronts, including Lebanon. I mean, it goes on and on. But to be honest, it seems like a net negative, really, for the US. I mean, they spent a lot of money, obviously, on the war. They've increased their own inflation, and they've got to pay, was it 12 billion or something? Either 12 or 24, something in that range. And then they've also got to pay another 300 billion in restorations. So I don't know. I just don't really think it was that conducive. I mean, there's a nuclear side of it, obviously, but financially speaking, I think it's been quite detrimental. But hey ho, I'm not Trump, so what do I know? What do you think FOMC data will reflect? Nothing. I think we're going to get a hold, and I think we're going to get maybe, in fact, actually, given the headline, I think it's going to be pretty neutral. I think it's going to be very much a wait and see. Again, the market's currently priced. In fact, we can look at this together. Where's my edge finder disappeared to? Here, let's go to, oops, wrong tab. Here, let's go to CME Fed Watch. So what have we got priced in at the moment? 1.4% of a cut and 98.6% chance for hold. July, we have, hold priced in as well. So, and then September, I'm fairly sure a hike in September, no? Actually, no, sorry, I'm wrong. A hold in September, and then we also have a 24% probability of a hike. So I would expect, relatively neutral. I don't really see much to warrant an aggressive lean either way, or a surprise hike or cut. Nasdaq going to rise after opening? Yes, Nasdaq, I would imagine, is going to rise. So on Friday, we had the SpaceX IPO. Actually, I don't want to get rid of those. Hold on. Let's go down to the H1. So when was Friday? Friday was here, no? Yeah, here. So Friday had, I wouldn't really call it a rally, but it did have support, we'll say, on Friday, obviously on the back of the SpaceX IPO. Then this is the market open gap. This is from the headline that came in about the peace deal. I don't think America's had the time. In fact, America hasn't had the open, obviously, to price that in yet fully. So I'm sure they've got algos and things that have somewhat, but I would imagine New York traders are going to step in and continue to add into long positions here. So I do think the base case really is continued longs. However, Actually, I'm thinking out loud here. However, do I have a however? I don't think I do have a however, so we'll call it there. Edge Finder retail positions on currencies. Absolutely. We can show you that. Code ELITE for a discount in the Edge Finder if you don't have it already, by the way. It does help me out. Okay, where is it? Crowd sentiment. We'll do retail sentiment because we want currencies, don't we? Currencies, we'll get rid of indices. We'll get rid of metals and commodities just for now. If you want those ones, I'll add them on later. What's my view on Euro Aussie? We can go back to that one shortly. About the gap fill, yes, the gap fill. The gap will very likely get filled, but when will that be? It could be New York. It could be a case of we've gapped up and New York actually wants to correct lower. That absolutely could happen. However, I do think oops, hold on, what's going on here? Oh, I'm switching tabs. My bad. I think, yeah, sort of two situations. Either we just continue higher or we come back, correct this gap, and then continue higher. I don't really see a world really at the moment where we could continue lower on the NASDAQ. I think there's a bit too much optimism. We also got to think about the sort of inflation aspect. If the Strait of Hormuz is going to open again and we're going to get oil flowing back globally, that's global inflation expectations are very likely going to start cooling. I mean, we're already seeing yields coming down as well, meaning central banks likely will pivot back to their original stances, which generally across the board was pretty neutral, and some were quite dovish as well, which is obviously a conducive environment for indices and the stock market in general. So yeah, I'm not really in a position where I can take a bearish call. I know I have done previously. I do still have a bearish case, but it's not a short-term one. It's more of a longer term over the next, 18 months or so. So right now, we'll stick with the bullish case. What do you think of tech stock in the second quarter, especially AI stocks? I'm sorry about that. I'm not sure if you can hear the banging. We've got builders next door. Yeah, my apologies. I can't really do anything about that. So what do we think about, what was it, tech stocks? So we'll do SMH because these are semiconductors. I really am unhappy with AI, to be honest. I think there's a lot of overvaluation, and I think we are really in a bubble. I don't really think anyone can deny that we're in a bubble, but the difficult part is timing the bubble. Back in 2008, let's say, we had people calling for a crash back in like 2006, 2007. It didn't happen until 2008, and a lot of people were liquidated trying to price in the crash way before it actually happened. And the markets can stay irrational longer than you can stay solvent, the classic saying. So while I don't want to be involved in it, I do think we are in a little bit of a danger zone. I'm not putting money on it. I think it's a loser's game to try and time something like that. So I think the easiest way to go is bullish until we've got a very serious red flag to tell us otherwise. Check healthcare sector. We can maybe do that at the end. I'm not well versed in stocks, so I don't want to spend too much time going over them because I can't really put much value in. What's up? What are your insights of Swiss yen and dollar yen? Well, we've got a hike by the Bank of Japan coming up. Is it today or tomorrow? Let me just double check. Tomorrow we've got a hike by the Bank of Japan that's priced in. So to be honest, I don't really have much going on. I did re-enter short on dollar yen actually. Again, betting on a little bit of war premium getting priced out of the dollar and a little bit of weakness on the lower yield, cooler yields. However, I'm not that really interested, to be honest. This is more of a speculative trade on potentially an MOF intervention. We've got the BOJ hike. They might give hawkish guidance, but I would highly doubt that. And again, that war premium on the dollar getting taken away. So yeah, I don't really have much for dollar yen. When it comes to, what's the other one? Dollar Swiss. Yeah, I would imagine long positions are still valid, maybe. In fact, didn't we just look at dollar Swiss and we said short? Maybe. I don't know. Let me just double check because I'm getting confused. Maybe it was dollar CAD or was it dollar Swiss? Yeah, dollar Swiss. Sorry, my bad. I'm getting confused here between all the markets. So dollar Swiss, yes, actually bearish. So what we were saying on dollar Swiss was potentially a short basically off this double top and this second rejection off the 200 moving average. The downside is this bullish H4 trend. So it depends what time frame you trade and what strategy you trade. But yeah, I would really say short positions are kind of the I don't want to say way to go. It sounds like financial advice, but you get what I'm saying, hopefully. I believe the deal is a red flag. Why so? Yeah, I mean, when it comes to, red flags and the stock market and bubbles and things, I think really what I don't think it's going to be really a thing of we see like, 20% negative in, a week or a couple of days. I think maybe what's going to happen, again, this is just my thoughts out loud. This isn't a game plan or anything like that, but it's likely that we're going to get these AI companies IPOing. I've already had SpaceX. Again, their main revenue source is Starlink, but the other things like Grok just burn money, and obviously the rockets. So they are not making money. They're not a profitable company as far as I'm aware. So yeah, quite literally setting money on fire. Although the company is good, what they're doing, I can see the benefits of. So I'm not saying, it's a stock that's going to go to zero. I'm absolutely not saying that. But when we start getting earnings from like, Anthropic and OpenAI, these companies that just don't make money, it's going to be a bit of a problem, because, why would you buy a company that isn't profitable at the end of the day? It's really as simple as that, in my opinion. But again, as I keep clarifying, I'm not a stock guy, so maybe I am misinformed on these things. I'm willing to be corrected if I am wrong there. I also don't know how SpaceX earns income. It doesn't. Again, as far as I'm aware, they make about 2 billion, 1.5 billion from Starlink, and then everything else is burning 2 to 3 billion, I think. So yeah, it's a bit of a rough one financially. But again, surface level information from me regarding the stock market. Anyway, let's move on. So oil is coming down. However, I'm not looking to be really doing anything on oil. I think it's tricky because the peace deal sounds great and it's very attractive to go short on oil at this moment. But the problem is we're coming into the 200 moving average. Doesn't mean much on a larger landscape. But it wouldn't be a huge shock to me if we do get this just fall apart. Trump says something and Iran says something, and it all just goes wrong, and we end up back, to these highs. Maybe. Again, not saying that happens, but I'm just cautious. I don't want to be involved. But yeah, silver and gold, I would quite like to be long. I know last week we were talking about short positions. If that was still the case, I would actually be looking to enter on this 61.8 retracement. But again, given the landscape that we're starting to see emerge, I do think longs are a little bit more sensible. When it comes to positions we were looking at, so like pound dollar, I'm actually in a euro dollar short as well, which I'll show you here. They're not doing very well. I think that's obvious to say. So I think fundamentally the trades are still completely fine. I would happily take them again, but it's just a case of the dollar weakness that we're seeing today is obviously a negative impact for these markets. Depending on how this week goes, I wouldn't mind maybe taking another attempt if this one does get stopped out, just because even with everything that's going on, the dollar is still a good currency. So if we look at, actually, hold on, I've just realized I'm yapping. Let me see what time I'm on till. Oh, cool. Oh, it's only been 12 minutes. I thought I was talking for like an hour. Anyway, let's go back to the US heat map. So the US dollar is still quite well supported. So we've got GDP that had a little bit of a miss here at 1.6, forecast was 2. PPI is elevated, which is obviously bullish. We've got jobless claims here that's a little bit bearish. But other than that, everything's okay. So it makes really a bullish and neutral. So I'm quite happy to take, to continue buying the dollar until really there's a reason to not do that. So I think what we might see is, again, the Strait of Hormuz open up, oil starts flowing, energy costs start reducing a little bit, inflation starts cooling potentially, and then we start seeing weaker currencies across the board. But I'm not going to touch that until that does happen because, again, at the moment, it's still a little bit of a gray area for me. I think those IPOs are just to take retail investor money. Yeah, I mean, I don't really want to say it is or isn't because, again, I'm not overly educated and I don't want to sit here and give you guys false information. But yeah, it's difficult for me to sit here and be bullish because is it 10 or is it 100 times what's it called? Not revenue, evaluation. It's incredibly high. So again, I just don't see the point of investing really. I'd rather wait for a dip. If the dip happens, I'd quite happily buy a little bit and sort of DCA in small positions and then see how it goes over a longer term. Because as I said, I do think that these companies, I love Anthropic. I use Claude all the time. I love the idea of space travel. I'm not not saying these stocks are completely worthless, but I do think they are overvalued. So I'd quite happily wait for cheaper prices and then maybe buy. NZD CAD longs. Yeah, I think so. I would, I would partially agree with that. So New Zealand, the RBNZ has pivoted hawkish. Canadian dollar, again, I would expect continued weakness on the back of the weaker oil prices. So I think, generally speaking, this market would be relatively easy to try. If I know, I'm maybe not actually. So we do have a relatively clear uptrend here. You know, we're getting these higher lows getting printed with higher highs. So overall, it doesn't look too bad. The moving averages are quite choppy though. Gosh, busy day. Sorry, that's my doorbell. I'm not sure if you guys could hear that. I would imagine you could. It was very loud. And builders. God, what a nightmare. Sorry, guys. I do apologize. So yeah, maybe something like this. So maybe we could see a correction of this aggressive left side candle we've got and then take a long position from there. That might be the way to go. So yeah, we'll see about that. Methodology on trailing stop. It's basically the same as Nick's, if you know how Nick does it. So let's just... let's say hypothetically, just for example purposes, let's say we bought down here. So the idea, I mean, I kind of go two ways with this, because I don't like to, actually that's the wrong way. I don't like to squeeze the trades really, unless I'm a little bit unsure. So I use the fib as a sort of R&R tool here. So there's two ways to go. If the market is rocketing, I'll normally trail to lock in, 1R or 2R or like hard amounts of percentage return. Or in a market like this, where it's a bit more choppy and uncertain, I'll wait for these higher lows to get formed. So obviously we've got a low here. I'd wait for the higher low here, trail to break even. Of course, this is in hindsight, so it's a bit easier said than done. And then just continue to trail under the structure and yeah, let the trend do its job. So yeah, that's that. There we go. YouTube University. Yeah, I mean, I suppose these streams are quite useful for people to sit and get different ideas and information and things. Pound Swiss. Yeah, we've spoken about pound Swiss quite a lot, and I don't like it. So well, I would say fundamentally, bearish ideas are kind of the go-to and the default. The monthly time frame is bearish, weekly's bearish, daily's bearish. The fundamentals, I'm fairly sure, are maybe not bearish, but at least lean somewhat bearish. So let's just take a look before I say that too hard. Yeah, I mean -5 in pound Swiss. So those things line up. So higher time frame trends and fundamentals are bearish. The problem is, on the daily, on the technical side, we've broken out this trend line. Again, it might not mean too much for you, but for me, this is just signaling a higher high. I do think this is probably going to continue lower, but there's just no setup for me at the moment. Besides that, we also check the macro scanners and go down to carry trade scanner, and we'll look for pound Swiss. And we see it's a very expensive market to sell. So you get paid quite nicely to be a buyer. But the problem is, if you're a buyer, you're against the fundamentals, you're against the trend. But if you're selling and you get stuck in a range, or the trade doesn't work out, you're not just going to lose money on the trade, you're going to lose money in the swaps. And it can be quite a lot of money as well, depending on how long you've held and what the position size is. So it's not really ideal. It's not a market I'm really that bothered about trading. What's my strategy? Again, very similar to Nick's actually. It's a case of basically just trading fib pullbacks. So, for example, if we were buying here, I would have entered long on this 50% retracement here, and then basically trailing stops, unless I've got a reason to have a hard stop, like a major higher time frame level or something along those lines. But yeah, generally something like this, and I'll close the trade either on a trailing stop, a hard take profit, or when there's a catalyst like the fundamentals change. So very simple. And then I use the 200 and the 50 moving averages to find the trend. So I'll always follow the trend. So if the 200 is above the 50, like here, I'll be looking to sell. If the trend is down and the fundamentals are bullish, I have to wait. I don't really like to trade. Don't like to trade counter trend. But if so easy, everyone would make money, because today we have great news. So with 20x leverage by NASDAQ, and that's all. Sometimes markets differently, so I look carefully. But yeah, I mean, no one knows what's going to happen next. I sit here like 3, 4, 5 days a week sometimes and tell you guys my ideas and what I'm thinking and all these things. Sometimes it works, sometimes it doesn't. But the point of being a trader is you've got to have kind of an information advantage. And that doesn't mean you have information no one else has, because that's, well, next to impossible for retail traders. But it's more a case of understanding exactly why the market's moving. So, for example, if we are trading pound Swiss, we already know the fundamentals are bearish. We can see the trends bearish. So that reduces our our discretional decision making quite significantly, because we don't even have to think about direction now. We know we want to be short sellers. All we now need to do is figure out where. So do you see what I'm saying? It's not a case of, oh, it's 50-50. We are, no one knows, we don't know what's going to happen. Well, we can, make smart decisions and educated guesses to try and deduce where the market's going to go next. Obviously, again, sometimes we're wrong, and that's part of the job. But that's really as simple as it is. Obviously, again, simplifying that massively, but again, hopefully you see what I'm saying. Going to LSE next year. I've got some friends at LSE, actually. We could meet for a coffee there, Ray. I assume you mean, do you mean London Stock Exchange, or do you mean London School of Economics? Actually, it could be either. I'm not sure exactly. AUD CAD long. Yeah, I think the Australian. So I've spoken quite a lot about my dislike for the Australian dollar at the moment. However, I think on a relative strength basis, this trade is pretty good. I think the Canadian fundamentals are relatively weak. I think they're really struggling. Generally speaking, like, cost of living over there is absolutely awful. It's very similar to the UK. So yeah, I would quite happily sell the Canadian dollar. And then obviously we layer on the oil prices decreasing as well. So I think it's sensible. It seems to me that Swiss is the strongest currency since the dawn of time. Well, yeah, kind of. It's just it's a safe currency, really. But yeah, it's a good one to hold. But again, if you're a short-term trader, like swing trader, intraday, even scalper, it can be a little bit messy. You mean London School of Economics? Okay. Yeah, we could grab a coffee. I'll probably be in the area. What's my opinion on the Nikkei? The Nikkei, bane of my existence at the moment, actually. So I was long. Actually, wait, hold on. Go to the right time frame. Here. So I bought somewhere around here. The fib might be a little bit wrong, actually, but I bought something like this, and I had a stop loss around here. So that was kind of it. And I caught about 4%. I was really proud of myself. I was like, this market's looking stretched. It doesn't look great. So I managed to get out basically at the top, and then it had this, and I was feeling, fantastic. And obviously we had the Iran situation, we had yields coming up, and it was a good point to get out. But since then, I was looking at the next level, which was here. Excuse me. So I was looking at getting in here, but at the time, again, I just didn't really see anything that warranted it. So on the first entry, the edge finder was bullish as well. I forgot to mention that. The edge finder is not bullish on the Nikkei at this point. So I didn't really want to take it. However, it lined up perfectly. So, pull back off the 200 moving average, came into the fib level, tested previous structure here on the left. In hindsight, I should have taken it. I just should have followed the strategy, but I didn't do it because I was too hesitant. Maybe it's one of those things. Sometimes that saves me. Sometimes, like now, I'm looking back, it's like, I could have just done it. But that's, a little bit painful. So moving forwards, I would look for basically the same thing. So fib from the low to high here. And then looked for an entry around the 50% retracement, something along these lines. Stop loss at the previous low. And yeah, I think that's kind of it. So let's take a look at what the edge finder is saying for the Nikkei. Here. It's only got a score of 2. You see what I'm saying? It's kind of fallen off the edge finder. And again, that was a catalyst for me to start getting out of the position. A good way to use the edge finder as a timing tool. When it flips, if it's bullish and you're in a long position and it flips or starts to flip neutral, maybe that's a sign to get out of the trade because the fundamental drivers are starting to dry up. So this is a bit of an issue because I want to be a buyer and the edge finder doesn't have really anything going on here. I think I'd need to see this pop back into a bullish territory, and then we could maybe warrant an entry there. I've just got the Edge Finder, and I want to know if the software just take a hike or cut of interest rate as a number to get the score, or does it take the fact that a cut can be hawkish, vice versa? No, so the Edge Finder is hard data. It doesn't take into account the what do you call it? Sort of the forward guidance or things like that. So if you did want to use the Edge Finder for that, you can go to, is it macro? No, sorry, it'd be economic data. We can then go to interest rate data, or we can look at the interest rate. So if that's something you care about, this is something you would want to use. So you can look at the interest rates on all of the currencies it has. You can look at the forward projections. So this is a good way to use the Edge Finder if you are an interest rates orientated trader. Key breakdown Aussie US dollar. Yeah, we can have a look at that in a second. Dow making new highs. Yes. COT change for Nikkei has me slightly worried. That's another thing as well. The thing is, though, what you've got to take into account is the COT data is delayed. And that was obviously during this period here where we saw the downside. So it doesn't, I mean, it's a little bit of a concern, but it wouldn't stop me from taking the trade because, again, it's outdated. It's already delayed by the time we get it. So that was, yeah, this move here, I would imagine. And then if we start getting a rejection off the next pullback and continuations higher, then very likely we're going to see that flip back next week. You think missed your point? I'm not really sure what you're asking then if I missed your point, unfortunately. Okay, so Aussie US dollar. Yeah, previously I was quite bearish on this market because, you know, the fundamentals were fine. We had, you know, again, dollar strength, but with the dollar deteriorating a little bit, we're getting yields coming down slightly. I don't really know if I want to be a short seller at this moment. I do still like the idea of being short. So again, if we go back to the Edge Finder and take a look at Aussie dollar, bear with me, here, we're getting a score of -4. So it's neutral, but it is more bearish leaning. We've got jobs markets that's bearish, we've got inflation that's bearish, and technicals that's bearish. So I would say shorts are still valid with caution. So maybe actually that would give us an entry around basically where this market is. So I would stay, I would stay on the bearish bias, but I don't think I'd actually want to take the position. I'd rather wait for what, I'd rather wait to see what happens with this peace deal. How will FOMC affect the markets? Well, let me get my tarot cards and I'll be able to tell you. No, obviously I'm joking. So it depends what happens. I would expect nothing. I don't think we're going to have much of interest today. I don't think so. I think it's going to be more a case of, again, very unbiased, neutral type of forward guidance, which very likely won't affect the dollar. I could be wrong. And again, we could get a surprise, but that's just my personal opinion at this time. If the Bank of England, for example, is hiking into a contracting economy, and after they hike, they have a dovish stance, no, it doesn't. As far as I'm aware, it doesn't, no. So I think that actually just about wraps up everything, which is quite nice. So we've only got a minute left. So let's just take another quick look at what the top setups are saying, and then I can throw it over to who's on after me. Ivan is on after me. So let's get rid of neutral because we don't trade neutral. So the Dow is getting a bullish reading, which is nice. The US dollar is still bullish, so fantastic. This is reflecting what's going on in the markets very nicely. So if you were buying the Dow, congratulations, because I was looking at buying the Dow, but I just couldn't do it again because the landscape wasn't favorable in my opinion. Would it be, that was the wrong decision in hindsight. Pound dollar is still bearish, euro dollar is still bearish. So that's what I was saying earlier. I do still like the idea of being short on these markets and long on the US dollar, but I do think it would be more appropriate right now to wait for the dollar to sort of bottom out, if you will. So I think what's likely to happen is a little bit further downside on the dollar, maybe back to these lows, and then it'd be a case of, okay, well, what's going on? Maybe we could continue high from that point, have a little retest here, and then a continuation up. I still don't expect the dollar to deteriorate, down to, let's say 90. I think likely we either stay in this range or we're going to break out, retest, and then have that continuation towards 105, back up towards 110. So yeah, that's kind of my rundown on the dollar. Hey, you stream really well. I'd love to become your dedicated fan and support you. Twitch. Okay. Thanks. I think, I'm not sure. Is that a real person or is that a Twitch bot? I've got no idea. I don't use Twitch. Anyway. New Zealand Swiss dollars are Euro Swiss, New Zealand dollar. The pound is still getting a bearish reading. So I think, yeah, the pound dollar short positions are still probably the best in my opinion. And the edge finder is saying that as well. So we've got the US dollar reading bullish, we've got the pound reading bearish. It's kind of like the, not necessarily trifecta, but you know what I mean? It's a very good, good environment to be short pound dollar. But again, as I was just saying, I don't think it's really the right time. So yeah, the problem is the daily is quite ugly as well. So yeah, I'm gonna have to just wait. I can't really build a trade idea from this because there's just nothing there for me at the moment. Dollar breakout is better for me. Yes, me too. I like the idea of a dollar breakout. Anyway, ladies and gentlemen, I've got to head off. The end of my time is here. That sounded really morbid, but it's Ivan's turn to take over the stream. So don't go anywhere. You're in great hands with Ivan. Sorry. Guys, stay safe. Don't get margin called, and I'll see you all tomorrow. Thank you for being here.
Attention A1 Trading Show fans. If you're looking to connect with other traders around the globe, consider joining our Discord community. Inside of the group, you'll be able to join our chat rooms, check out our educational material, our coaching webinars, and more. Within the group, our top traders share their trade alerts, which will send notifications to your phone or desktop whenever we take a trade. Our trade alerts come with entries, exits, and full analysis with every trade shared. This is not a blind copy signal service, but instead offers an educational way of looking over the shoulder of our experienced team. For fans of the show, we're offering major discounts for a limited time. To claim your discount now and join the group, click the link that's just been dropped in the live chat, which will connect you to one of our trained support reps here at A1 Trading. Again, click the link that's just been dropped or find the link in the description of this live stream and you'll be connected with someone right away. Now, back to the A1 Trading Show.
It is Mustache Monday. Welcome, everyone. I just can't stop laughing. Thank you very much, James. Appreciate it. Well, didn't introduce me as a Yenman either, but you know, we're here for it. Usa teammate is Usa. Just really Usa. So, did he answer your question? Because just for generality, for pound, what has really happened now is that market then would price out a rate hike and would actually be kind of neutral or even then dovish because they would of course not by any chance hiking into an inter recession. For that matter, if we take the US economy, for that matter, yes, we have dollar falling on the announcement, but the other part of this is that we have a very specific situation where we have inflation rising, limited growth or less growth than normal. We have higher core and we have higher headline inflation, leading to then would be a recession. So that would be, for that matter, a rate cuts. But then everyone is in the same situation. For that matter, for the U.S. economy, which is already very strong, and growth hasn't really been shaken down that much, and that's really important part. Is yes, we've had higher inflation, but growth hasn't really been knocked out of the park that much. So that's that's a key point that we're not necessarily regardless, but that always has to be taken into consideration. Number two, we're not really pricing in rate hikes in the United States, even though it's a very strong and high inflation economy. That should have been, or higher inflation economy, that should have been the case, but that hasn't been the case. So the question is why? And that would have been the case for this week's FOMC meeting would be, are they going to hike? Now we're gonna have this new guy coming in, and he is allegedly more dovish than others. But then he's a part of a team of 19 members, so not necessarily going to change anything much. But regardless, what we are seeing now is that what I've said kind of the whole time, every single time that I have the opportunity to say it, is that dollar rose in the beginning, rose until we have the sniff that we're going to be the end of the war. And when we end the war, it's going to go lower. So what is driving dollar higher? It is CPI and PPI, or the expectations that PCE, CPI is all going to rise. That and therefore dollar rises. But what happens on the other side is that when you have inflation rising rapidly, way faster than your income, which is loss of purchasing power, what happens on the other side is growth. Growth goes down because, yes, goods and services becomes more expensive, but you're not going to buy what? You're not going to buy the same mileage or the same amount of petrol for, what was it before? Was it two? No, it wasn't two. Was it 149 before the rose? And then it goes, sorry, 249 before the rose, and then it goes up to 3 or 4 on national average at least, or even up to 5. Goes to 2.5 to 5. You're like, hey, this is double. I'm not gonna do that. So they're going to sell at a higher price. Inflation's higher, but actually not selling more amount. They're actually getting less income. So what happens then to the big companies that, yes, you have higher price, you have higher you have higher income per unit, but you have less units sold. So at the end of the day, yes, you have an increase in dollar, you have an increase in price, but then everything collapses kind of on the back of it. And that's what we are pricing in now, is that then the recession will come, or the slower growth, or for that matter, the slower rise in S&P 500. And that's not necessarily today. S&P 500 within this announcement, I believe, should go higher and continue higher, and is 1.5 higher today. Okay, cool, great. Sorry. And 2 point, yeah, that makes perfect sense. But when this actually goes through into the economy, and it starts to have less and less, more and more significance comes when it comes to income, things starts to fall down. What do you think about yen? Oh, don't get me started. I don't know why I did that. I'm sorry. I have a half year resolution. I will be more serious and less jokey with you, because people call me the clown sometimes, and like, I don't like that. But that's why I brought out the mustache. I'm not going to say without saying, but I'm saying that Bank of Japan might intervene. Your fetish. Yeah, it is. Thank you. Pointing out the obvious, Captain Obvious. The reason why I like yen is because it's seasonally supported. It works with seasonality. It basically one directional for most of the year. And it has, and the reason why, let's go back on a bit of a trip, right? Do you guys remember pre-2020? Do you remember 2019, 2018? When I was trading, I was in the market in these eras, but I remember 114 to 110. It wasn't going anywhere. It didn't make sense to do anything to dollar. And now we're up at 160. What happened? Economic difference. US becomes stronger, and Japan economy really didn't have any growth since what? When it did have growth last? Maybe 19 before the dinosaurs. So, we have about 30 years of them trying to create inflation and growth, but that hasn't really happened. So that's kind of where we are. But what I'm saying is, said differently, is I we experienced, that is the day after the previous FOMC meeting, that Bank of Japan intervened. We are at 160, 160.08. We have a central bank meeting from Bank of Japan tomorrow, where they're going to announce a rate hike. It's already being priced in. It's already swallowed by the market, so that's not going to make the yen stronger or weaker. Then they're likely to continue their bond purchases, which is making yen weak. And then the question is, are they going to taper, or they're not going to taper? Or are they going to continue their fashion that they're doing? Are they going to be bothered that the JP10Y, isn't it? Yeah, it is. The Japanese 10-year bond is about 2.57 or not. Does it need to come lower? Because it has been rising very rapidly. And for those who remember that it was tapered at 1 before, then it was tapered at 1.6 or so, or first at a half, then 75, then 1, and then it seems to have gotten in at 1.6 or so, and now at 2.57. For that is important that it has risen so quickly and so rapidly. Are they interested in making this one fall? If they're trying to make this one fall, what happens to yen? Correct. Yen will also weaken. So that's kind of the discussion. So I'm like, yeehaw, make yen go weaker. Euro yen goes higher. Fantastic. I said yesterday I wanted to have a pullback. I didn't get it. And I'm like, cool, this looks great. The problem here is that we have dollar yen, and if dollar doesn't become weaker, we might have an intervention from the Bank of Japan when dollar is weak and liquidity is lower, which is going to happen after FOMC. I'm not going to say, I feel like I'm being, a bit of annoying in that I'm saying it, but in my experience, after the Fed meeting in June, which is on Wednesday, liquidity drops, velocity drops. It becomes boring. We don't hit our targets anymore. It becomes a bit more random. It doesn't trend. It doesn't do this. It doesn't do that. It just becomes boring. It's like wondering, what am I going to do? And that's their opportunity. And that's their opportunity to bring this dollar yen down, like they did, well, back in July in 2024, from about 160, and that was about 9th of July, 11th of July they intervened, and then they intervened 31st, and then that was also when they had their interest rate, their monetary policy meeting, where they're also increasing interest rate. Just saying. So, how does June or July look like? Generally, kind of in my little experience, okay, I guess that's a 250 kind of range, but it's just the same price at the end of the month, at the end of the year, at the end of the summer, anyways. So to me, don't be forceful, be picky, go into your strategy and be like, hey, where can I become even better? Where can I even find the better opportunities? So only 100% opportunities. If you go for like 70% opportunities, you have to go to 100, meaning that it's an open goal. It is as easy as scoring a goal as if there is no keeper. Okay, nothing is setting it. It's just straightforward. That's the only opportunity. And for that matter, for me, I am dollar bull at the end of it. Dollar yen bull. At the end of the summer, tomorrow we have to survive and try to jump over the intervention fears by Thursday. So on Thursday, we can be like, okay, what do we have? But also another danger that I'm speaking about, generality, but also specifically, is if we hit a target now, this week, for that matter monthly or for that matter weekly, things can collapse in front of your eyes. So as you see here, first week we hit target. Sorry, the 23rd we hit target on Monday. Dead. That is the danger that I have with your dollar at the moment. Is we reach a target which we are very close to. Very close to. That could be the peak. Because you're asking yourself, where is the market going to go? I always say it. I always taught you that every time there is a gap up on a Monday because of something happened on the weekend, for that matter, a deal. If it goes to target on a Monday before Wednesday, look out for the chances of a reversal. So do we have anything in that direction that we can have a reversal on Wednesday? Absolutely. I'm acknowledging FOMC that is acknowledging the current fundamental data. It's absolutely at all bullish in the euro dollar situation. And I've seen people being dollar bullish. I've seen people being, I'm going to short your dollar. I'm short your dollar. Okay, cool. Great. You are 50% right. If you take fundamentals into consideration, yes, you're 100% right. Do you want to be dollar bull buying into FOMC? That's totally up to you, not financial advice whatsoever. That's where I kind of see the opportunity, not the opportunity, but that's where I kind of see where's the likeliness for dollar to rise from, what drives. Could also fall from now. Also, your dollar could fall from now, hitting target and go lower. So out of kind of nowhere. That's very, 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 very much a case. But what I'm asking you is, if we have, and this is a peace deal, what do you see FOMC as? Correct. A dollar bearish sell opportunity. So if you see that dollar is strong, dollar will be strong because of FOMC. We have the deal that shifts us away from fundamentals into risk on, risk off. We're going to have a release rally in euro dollar. If FOMC brings it lower, it brings your dollar lower. There you go. That's how I want you to think of it. So if you find dollar strength to be the leading go, then sure, be aware of FOMC. If you are dollar bear, be aware of FOMC. And I'm not saying you should buy your dollar in FOMC. I mean, look for it to come lower, expect it to come lower. Don't get burned by it, and then look for the reversal. Look for your entry reasons. Cool. New Zealand dollar hasn't really risen as much. And that's really interesting that it's really happened today is that New Zealand and Aussie kinda isn't as strong as euro. Why is that? Can somebody in this entire world tell me why is Australian dollar and New Zealand dollar not as strong as euro? Digital content says dollar should stay strong. Great. You're 150% of the you're one part correct. The question that you have to always ask yourself is, what makes price move? Always. What's the current driver? We currently have head to head. One is dollar bearish, one is dollar bullish. Which one are going to win? And I say dollar to target, a dollar to bearish target on the weekly. Probably this one. That is for this week 99.33. That represents to me, that's where we have to go. That's where we should go. But any price below that is, hold on, we can reverse it from here. That's an out. And anytime this time of year you hit a target early or for that matter at any time of the week during the summer, whenever we hit a target at any time during the summer, it generally is a pause. So that's June. That would be a target last year. goes into range, hits target, or goes a bit lower, but doesn't continue much more than 50 pips lower, and then returns, and then returns, and then returns, and that's kind of what I imagine the summer to be. Okay, so you can almost do a range trading, counter trend trading for that matter. So for me, the low and the bottom on dollar this week is 99.30. That makes dollar bullish a bit more viable to wait for it. Aussie hasn't really hit target, and why am I not buying it? Because we're not in the buy zone. Number 3, we jumped higher rapidly yesterday, and number 3, I believe fundamentals should outdo the risk sentiment at the end of the day. And this dollar bearishness is just a short-term move, at least into FOMC, and then from FOMC we can see, okay, what kind of direction do we get? Do we get a big jump on dollar? Do we have a new higher high? Or do we get nothing at all? Pound, same situation, is struggling. And I've seen someone, I commented about that, true. So for pound is a weaker one. But why is it so weak? Because of weaker fundamentals. And in that essence, shouldn't a weakness in dollar make pound strong? Or when dollar is weak, pound dollar should rise? Yeah, and I've seen someone say that the best case is to short pound dollar, and I saw Nick had a trade on it. I can definitely see that, and I can see the reasoning behind it. And for that matter, I myself bought it, but I don't. It's not necessarily like a straightforward case. But at the moment, for me, I don't have new lower lows and lower highs. We have gone beyond the sell point. We haven't really hit weekly target yet. And if I'm supposed to sell it, I'm supposed to be something like that. That's a sell point, and that's a sell point. So I don't have that, so it doesn't matter. Hello, Yen Man. Do you have to talk to the team? Please send a message to the team. I have not nothing to do with it, but they are very much more equipped and knowledge able to handle that one. So get in contact with the team, and they should help you out. So for tomorrow, I said yen weakness. Did I get yen weakness? Well, yeah, we got off the strength at least, up to target. I also said that dollar yen is at a high. We have a very high dollar yen. We have intervention fears. So to me, that's a bit more like, hey, I don't know. I really want to buy your yen, like my life depends on it. I'm also crying that it's higher, but it's definitely not in a good space generally. And because I believe that the Bank Japan meeting tomorrow should send euro yen lower on the tick, on the candle of the hour, and then rise again if there is no more rate hike expectation being priced in. If Bank Japan, because I'm only going to trade the after facts. I'm not going to trade before because who does that? But I want to see that they're going to continue in what they have led the media to believe is going to be the path, so I don't get caught. Because if this creates like what you can call in English, a downfall or an end to a carry trade, there is a lot of pips lower. That is 500 to 1,000 pips, not in one day, not in one go, but overall lower if we start to be fearing that Japan is going to rise interest rates for longer and higher, and that the carry trade is over. Okay? You're welcome. Indices. Lovely, isn't it? Great. I've said higher. I've said look for a reversal. I did not get entry. on Monday, or sorry, on Friday. Why would I get an entry on Friday? Well, I didn't believe it would go higher. And then Trump comes out and says, hey, we have a deal. And I say, hey, don't be so fast. And then it runs away. Okay, whatever. It is what it is. So that changes the summer a bit, but nothing majorly. But I can only say it's bullish. Supporters go higher. The news and the risk on is higher. I also saw a YouTube video about if SpaceX IPO would drain S&P or S&P for that matter, drain the stock market because we have seen less and less supply, but also that for that matter less and less available stocks in the market because companies are buying them back or they're being bought out and then taken off the market. So that's of course a theory, but at the end of the day, it's so structurally embedded into, for that matter, the U.S. economy and the U.S. financial system or financial planning, for that matter, that I'm not really worried about it. But can we get a pullback, please? It's too late now. So would have been a best case yesterday. Sorry, if we didn't have the news to come lower and then go in, but it's not that I missed it. It's just that, this is kind of what I was hoping for, and then that didn't go, and I'm fairly okay with it. It is higher for longer. And another one I can kind of put, sorry, bullish. Another one that I can put in there is, of course, how high can we go? And why is it bearish here? Thank you. The monthly target is 32,000. So we are just in the way. And we have gone down to buy zone, center pivot and M2, going to be below and then risen. So can we come back later this week with FOMC? I think FOMC again is going to make this one climb a bit higher. And S&P 500 as well in the same boat has gone below M2, has go below by buy zone. I thought, but yeah, it's not 7,005, so 7,800 is the target. I am patiently waiting because there's nothing better that you guys like than to see a trader on the internet buy the highest high, and that is the peak. And then the deal falls apart, the world goes into a crisis, we have a recession and everything. Everyone is laughing at the guy that bought it at the very much peak. I don't want to be that guy. It's fun for you guys to make you guys laugh, but I'm not interested. What my thought about gold? Potential deal collapse until 19th for a dip sapphire. How long have we known each other or been together? This man is an old time friend. You will hear us sit on the living room drinking coffee until we are old people. We are going and we are enjoying our coffee and just having chit-chats about these markets. I'm bullish on gold. Generally missed the reversal, missed the bottom, and that's not necessarily because of my lack of confidence. Sorry, it's there's lack of pullback to the levels that I would like to see. So, okay, cool. How do we have a collapse? Yeah, we can have a collapse. We can definitely have a collapse. And that is kind of the actual reason why I'm going to be buy at the high. Because if this collapses, then we are going downtown again. And then I can be like, okay, technically I want to be looking into this level. And then you can be like, oh, that looks fancy and fun. Yeah, it is fancy and fun. You don't make money making trading plans like that. Yes, that is absolutely very true. But I'm also not losing money buying up there. Risk-reward ratio. Polish. Yeah. Did I say Polish, Rolly? Well, maybe Lewandowski could have done that better then, but bullish generally. The reason why would be the recession that is coming on the others. The recession fears then coming in the United States before, because we have had that relatively fast increase in inflation. So meaning that recession should come in. Is that necessarily a recession that could come in that would make dollar fall, gold rise? It's just the thought of it. It's just a think. It's just a thought of it that it could be ever a possibility. Thoughts, DXY. CPI is hot. Expectations for hike supports the upside. However, by the way, there is no rate hike expectations in the United States. It's not until March 27. However, the P is in safe haven dollar buying support downside. What are your thoughts? That is absolutely a correct understanding of the current situation. That is always, not always, but it's going to be that is the two opposites. You have to decide. Are you going to be a dollar bear or are you going to be a dollar bull? Are you going to be fundamentally driven or are you going to be a risk environment driven? Pull market. Pull the markets. And I have landed with FOMC is hawkish. So that would be dollar strength. So if we target for bear side, which is 99.33 on dollar, that sets up for a bullish FOMC just because of target hitting and stuff like that. And the realization of the higher inflation or recognition of the higher interest rates, higher inflation, that would be dollar strength. But then it's not going to last because everyone knows that it was higher inflation is last year, or not last year, but last month. It's old news because we have the end of the war, and we have at least a ceasefire, and allegedly we have boats going through the strait. So I mean, I'm not an expert here. But if this starts to pick up and this reduces, I guess, according to Trump, that's supposed to be happening. Then then that's a dollar weakness. So I'm fundamentally dollar bullish, risk environment, risk bearish. So which one are you going to catch? It's a 50-50 situation, unfortunately. Which one do I find more important? I find that overall fundamentally is going to drive dollar higher for until Wednesday at least, and then if the war piece is still there, we could have a dollar bearish drift during the summer. But as long as inflation is still where it is, we're going to see some demand to dollar, but yeah. We'll have to see interest rate expectation coming lower. But yeah. Okay. So that was me. Great having you guys. Dollar yen, expect volatility for this week on it. Don't sleep on it. I wouldn't say buy, I wouldn't say sell. I would just look out for it. Don't get crushed. So since if we had a fun time, you're going to have an even better time with Alan. And if you find that I was the funniest guy in today, you should probably check out my YouTube channel. And if you need help with your trading, because I'm a mentor, I try to help you guys as much as I can because that's what I do. That's what keeps me awake at night. Then you should hit me up either on YouTube or on Discord. And until next time, boom.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream or being dropped in the live stream chat as we speak. speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, everyone. Good evening, good afternoon, wherever you guys are watching this. Seems like we're having a risk-on day today. I mean, look at the NASDAQ here, up 2.6% here, reaching for those all-time highs, right? Seems like the market is very thrilled here that we have a move forward in terms of a peace deal. The Strait of Hormuz is open, but we still have some things to finalize. It's not officially closed, or not closed straight, but the deal is not closed, but we're pretty much right there. The only thing that kind of messed with it was some strikes from Israel to Lebanon, I believe, or yeah, something like that. No, Beirut. Yeah, that went ahead and rippled some feathers there. But nonetheless, it seems like we are getting very close to that deal. The Strait of Hormuz is open and risk is winning today. So you have Aussie dollar up, you have dollar down, you have gold up, silver up, which is weird, right? Because they're kind of trading like safe havens. I mean, like risk assets here. And oil is down a lot here, down to the $80 mark, right below that floor that had that $85 mark. So let's go ahead and talk about what's going on. I do have two trade setups actually that I took. Took them off the live stream, but let's go ahead and talk about how I plan to manage them and what I see from this market. What am I looking at here? Because Ivan made a great point here. You got to make a decision whether you're going to be a bull or bear, depending. Are you going to be following risk? Or are you not? I'll kind of give you my thoughts on how I plan to navigate this market, but I wanted to kind of answer your question there, Yoshi, as well. What are my thoughts on the dollar, CPI being hot, and expectations for hike? And I even said that correctly. So the actual on Friday, we had a hint that the war was going to be over very soon. And so you saw yields lower, and you saw some repricing, not only for the Fed, but for Europe and UK specifically. They were pricing out those rate hikes that they were pricing in before. So although those rate hikes are priced out, you still have to kind of see which central bank is going to be relatively more restrictive than others. So no, we're not going to get rate hikes, but I just want to see which one's going to be, cutting their interest rates faster than the US, or who's going to be leading the front, who's going to be staying put. That's going to be my main focus here. But as of now, you do have appetite for risk. And as of now, because the war is coming to an end, and it seems like it, you are seeing some softness in the dollar, right? So the dollar was the biggest winner here during this whole war. You had one, the prospect of higher rates, a more restrictive Fed. Two, you have strong fundamentals underneath the US, right? You had the growth and labor market holding up steady. And three, you had the natural just safe haven flows flowing into the dollar. So you had a lot of things going into the dollar. Now some of that is being taken away. And so obviously you're seeing dollar index kind of trickle down lower a little bit. So we are now at this level of support here, 99.5. I'm curious to see what happens here, if this is support and we continue higher, or if we flop down here and we get a bounce off that 200-day moving average. Let me share how I'm positioned right now. I said this on Friday, what I was looking to do, and I actually did it. So if you do get a de-escalation to the war, my thought process was contingent on three things. One, oil being lower. We got that. Yields getting lower. You got the 10-year lower. You have the 2-year lower, had a big drop of 2% on that Friday. So the whole curve in the US became lower, and you're getting a softer dollar. What that prompted me to do, because I saw how sensitive it was on Friday, yields and everything, I went ahead and went long gold right here. I now have my stop right below these lows here. So if we do reclaim that 200-day moving average and we get above it, then I'm going to be trailing this to the upside. And I think that as long as you see yields, being under pressure, oil stays below that $85 mark, and the dollar continues to soften, I'm going to continue riding this wave to the upside. So I'm long gold at the moment. You can see here that it's low risk, 0.06 or 0.06 lots. And then the dollar went short dollar Swiss, stops above these highs right here. And I'm going to be targeting probably, I'm going to see what happens at this 200-day moving average, because again, when I'm trading the dollar, I want to see what's happening with the XY at 99.5. If this level holds and we find support here, then most likely than not, that's going to translate into dollar Swiss. And then I can draw my stops, try to get out for break even and whatnot. If this level fails, 99.5, and we continue lower, then I'm going to trade dollar Swiss. I'm going to throw my stop loss right below, right above the structure here. And I'm going to target right here, like 0.79, maybe right here. I'm just going to trail it, right? The next level of support here, the very bigger solid one here, is going to be all the way down here. But again, I don't want to shoot for the moon here. So I'm gonna see what happens, because right now you are at a meeting point of this big level of support for DXY, right? This was resistance for a very long time here. It capped a lot of advances for many days. And so now we need to see if this actually holds or not. If it doesn't hold, then dollar Swiss continues to drop, gold continues to go higher. So that's what I'm looking at. Now, what's going to prompt me to get out of these trades? Because fundamentally, I'm still bullish the dollar, right? This is just a short-term opportunity that I'm taking. So I like the idea of dollar longs. I think on a relative basis, the dollar has the potential to be more restrictive than other central banks, right? We have strong growth. We have a good labor market. So if we need to hike into this environment, we definitely can. But I think the US is in a healthy spot to go ahead and hold rates, right? Whereas other people, for example, Europe and the UK, they have a growth problem. So it's not in their best interest to stay restrictive. And so I think that on that relative basis, I think that the dollar index, or the dollar, is positioned to continue being the stronger currency, I would say. So short term, bearish on the dollar, but ultimately looking to buy the dollar on dips. And so what that looks like is dollar CAD. I love dollar CAD, still relatively strong here, considering a softer dollar day. So if you do get dollar CAD to trade into this 200-day moving average or some kind of a meaningful retracement, then I'm looking to go ahead and buy that. So just so you guys know. But yeah, so I'm going to be watching yields very, very closely. If you get yields trading back up into here, right, continuing this uptrend, then you have restrictive policy being priced in. If you have them below this trend line here, this upward trend line, this upward trend that we've been seeing, then you have some easing that's being priced in, right? Some looser policy. So I'm looking at not only for the US, but just across the board to get a gauge as to where everyone's at. Like, look at Australia, right? Opposite. They were trending upward. Their yields were trending higher. But now look at that. Relative to the US 10-year yield, they're trading lower, right? So ultimately, I think that longer term, the dollar has some room to the upside. Maybe not breaking 100.5, which is a possibility, but maybe not, in the near term. But at least trading back up into this level here, this level of resistance. The dollar index is just in a big range right now. So I'm looking to buy the dip on the dollar and target the upper end of the range. Once we get there, if we get there, then of course I will see what to do next. But that's kind of where I'm at right now. I hope that makes sense. Simo says it depends on yields. That's the real Yeah, yields are going to tell the story. Yields will tell you whether a central bank or the market is expecting restrictiveness from a central bank or loose policy. It's really going to help you. Yields to me is like yields to me is how oil is an indicator or forward-looking indicator for inflation. So I like to watch yields. Let's see. Dollar need to take a break. Yeah, that's also a thing, right? A pullback doesn't mean that the trend is over. I think it's just pullback. So I'm trying to play both sides here. So for now, dollar Swiss short, gold long, both are doing well. About 1,100 in profit there on the prop firm account. So I'm happy with that. And so as long as we continue to see oil lower, yields lower, then I'm in a good spot. And then when it's time to flip again, dollar CAD to the upside I like, and maybe shorting some euro as well. I didn't mention this here, but with the euro dollar, you are seeing a potential revisit of that 200-day moving average, which I would love to short from, right? So originally I shorted over here, and if we get a higher price, that's even better for me. So shorting at that 200-day moving average will be a very good sweet spot for me to continue this dollar bull momentum, a theme that I'm kind of trading for. Now let's look at the edge finder, right? So gold's not getting a bullish reading on the edge finder. I understand that. I was a little bit early there because I was reacting to the sensitivity that we saw on Friday when it comes to gold and the dollar. But dollar Swiss is getting a bearish reading on the edge finder. So that's, giving me that confidence to stay in the trade, trail it as it goes. So I love that, right? Bearish -5. Swiss franc has been doing quite well too, on a relative basis compared to everyone else. So that strength here is being reflected today. You can see that the Swiss franc here is in brown. It's the strongest currency on the day as well. So strongest currency is the Swiss franc, and the weakest is actually the dollar. So that's why you're seeing that, that trade going in my favor there today. So dollar Swiss there getting a bearish reading on the edge finder. I'm going to, hold on to that trade. hopefully in the short term that reading gets even more bearish. That would be better for me. That's kind of what I'm looking at there. So yeah, look, shout out to the Edge Finder, man. Edge Finder really helped me out there in picking them. I was thinking of like dollar yen or dollar Swiss, dollar CAD, not so much because it's been really relatively strong there, and the Canadian dollar is kind of weak. Dollar yen, I wouldn't short it, but it does. I would say it has a potential to go ahead and drop lower, especially now that you're seeing some catalysts that are in favor for some dollar downside. Right, you're seeing the yields lower, you're seeing oil lower, you're seeing that safe haven that's getting priced out of there. So I would imagine dollar yen drops a little bit lower. You do have BOJ looking to hike to 1% as well, which that's going to be a catalyst that goes against dollar yen. What else? You do have a FOMC this week as well. So I do think that dollar yen has the potential to drop. I just wouldn't short it. I would rather just buy it on the dip. So yeah, that's kind of where I'm at right there as well. So I think the best one out of those three was going to be dollar Swiss. And so I'm happy I took that one. And again, shout out to the Edge Finder for giving me that read, because I don't think dollar yen's getting a bearish rating. It's actually getting a neutral rating. So not a bullish reading, but a neutral reading. So yeah. Hey, Marco, how are you doing, man?
Hello. I'm pretty well. How are you?
Pretty good. How was your weekend?
Pretty good. Been to the seaside and the weather was nice, so swam and basically chilled out for the weekend. Watched the breaking news. that was fun. So, how are you? How did you spend your weekend?
With family. Had
Awesome.
some birthdays.
Okay.
Yeah, I'm jealous, man. That ocean that you got over there is beautiful. I miss it.
Yeah, it's pretty nice.
So we had some developments, not a for sure solidified deal, but you do have the Trader Hormuz is open.
Yeah.
So that's prompting, yields lowered, some softness in the dollar, oil. The Nasdaq is about to reach all-time highs. It seems like we're on that path. We're very close to it. How are you seeing this market? Are you skeptical a little bit, or you think this time is different? I know we've always discussed this, and I've actually been quite wrong. And I always say this time is different. This time is different. But this time it seems to be different. But again, I've said this many times. How are you seeing it?
So this time it is different because I'm confused, because this may be it. I'm not 100% convinced, but this we're the closest that we have got so far. So as far as I understood, this is just another extension of the ceasefire, because the strait is still mined. And Iran still hasn't got their funds released, and nothing has been signed yet. And I still haven't heard anything about the nuclear topics. So for me, that's kind of a big red flag. But the markets don't seem to care. So the markets do seem to be going close to all-time highs, and we just gotta react to that. So at the moment, I'm a little bit patient, seeing this week how the situation will develop. And I want to see the Fed meeting on Wednesday. So not Warsh. I don't really care about Warsh because he's most likely going to be dovish. What I do care about is the dot plot. So the print, what do the 12 committee members think? Because they think the inflation is still pretty high and the strait is open but mined. So like to remove all of the mines, I'm guessing it's going to take a few months at least. So that could spike inflation even higher. I don't know. There's too many uncertainties at the moment. So I need more data, more information.
Well, Marco, who knows if there even is mines? I know that was a big speculation, right? It was like, are they even there in the first place?
Yeah. Who knows? Who knows? No one knows.
I'm going to stick with what I always say, and I'm always wrong, but I'm hoping that this time I'm not wrong. But I think that this time around, there's a possibility that it's real. I did see something about the U.S. within a certain window will go ahead and get some of the uranium out of Iran. I think I saw that, and I think that was something that was agreed upon. I think what really moved the needle there for Iran was the release of funds, which is going to be very hopeful. I know they have to do a lot of rebuilding, things like that.
Yep.
And I think too that one of the conditions for the strait being open is that there is still some kind of tolling system where Iran ultimately has some sort of control. Still going to be an open port, but they're going to have that leverage there always moving forward. So I think that was an okay deal that seems reasonable for both sides. It's not like stellar on both sides, but it's still like, okay, I'm giving you something, I'm getting something. But yeah, I mean, the market on Friday was very sensitive to it. Like yields were very reactive, equities as well, and so you're starting to see a continuation of that as well. So I think this time is different. The only thing that could ruin that is Israel that keeps trying to bomb stuff. Like that's I think I saw another headline as well where the president essentially was going off on him over the phone.
Yeah,
Similar verbiage. So
you're talking about the big Yahoo, right?
the big Yahoo. Yeah, I guess he really is big after all. I don't know, but it seems like he doesn't want this to be over, but we'll see.
Yeah.
We'll see.
Yeah, like I don't know what the hell is happening there, but the Middle East hasn't been resolved in forever, and I don't think this is going to be the answer. Maybe for the short term, and maybe it could make the US leave the area, but I think like with Israel and Iran, it's always going to be a conflict there, and something you will start in a couple of months. But at least the all of the rockets will stop flying, or the majority of the rockets will stop flying, and the strait will be open. I don't know, or there will be like a huge toll system in the strait. We shall see. But at the moment, what worries me is I can't really position myself. I can't really put on a lot of size, so I have to be a bit more patient. What are you running? You're running a gold long and something else, right?
Gold long and dollar Swiss short. Now I got in early on Friday, and it was more so because I wanted to be early if this was the case, and I had a tight stop there on the gold there just below the low, with low risk size on both of them. So I was willing to be wrong if I needed to be. And so I'm going to be, if we go ahead and reclaim this 200-day moving average on gold and this level of support holds as well, then I'm going to be trailing stops. Maybe not to all-time highs, but that's kind of where I have it now. But maybe somewhere within this area, like 5,200 or 5,000, somewhere here is okay. Until you start to see it solidified. Once the deal is solidified, my main focus is going to be, all right, which central bank is quicker to move, which one's slower to move, and that's going to be my whole game plan. Because I do think that we are still going to be in a higher rate environment, maybe not rate hikes, but a higher rate environment, and I want to make sure that I'm participating into the central bank, or if I'm buying a currency, I want to buy the most restrictive central bank. Yeah, and I want to trade that against the most looser one.
Yep. And have you maybe done some preliminary research on that? So what do you think?
I think the US is in a great position to go ahead and hold. Okay. Australia is still very strong as well. They have some ways to go to come down. Europe and pound. Europe is like at 2 point some. They were at 2 point. They're probably at 2.25 because they were at 2.15. I think. Europe's still in the twos, and I don't think they're going to hike if they need to, because they have the growth problem there in Europe. Pound as well.
Yep.
Kiwi dollar. They were very open to hiking, but I don't think they can. So Kiwi dollar would be one of the weaker ones as well. So actually, like if I were to get a pop in Kiwi dollar, when I'm ready to go long the dollar, Kiwi dollar short would be one of my trades. I like euro dollar short as well, and I like dollar CAD long as well.
I do like those. Yep.
So basically, like the weaker ones, I would say would be Kiwi, euro, and CAD. Trading that against the dollar.
For me, it's the pound, CAD, and the Kiwi as well. So I already have a short running on GU, which is actually, it's in drawdown, but it's not looking that bad. It's working out better than EU, for example. So EU today is rallying up, of course, but GU rallied up and now retraced. So maybe even if you get a complete resolution, GU could like stay flat or even go down. We shall see, but that's the only position I'm running at the moment. So I'll sell on GU. And I do still like it. I'm going to keep on holding it for now. But USD CAD, if it pulls back a bit, I think it's a pretty good opportunity right there, because the CAD is just long-term bad numbers. So they're going to have to cut, especially if they don't have the high inflation problem, if you get a resolution of the conflict.
Yeah. SpaceX is more valuable than the entire country of Canada. Did you know that?
That's crazy. I didn't know that, but
yeah. And our GDP, I think one of the lowest GDPs in the US, I think it's Mississippi or Alabama. one of those, like one of our
Okay.
most impoverished states, is stronger than the whole GDP of Canada.
Yeah, that's what you get for being Canada. And
And I say that to say, just to put to perspective, like the kind of the weaker fundamentals underneath the Canadian dollar. So I do like the idea of buying any dips. Saphir said, very, very valid question. Edgefinder is -7 on gold. Why did you long? Trump might collapse the deal. Trump could absolutely collapse the deal, or Israel in this case. The reason why I bought it is because understanding the drivers of gold in this environment, right? So higher yields were pushing gold lower. We saw that across the metals like gold and silver. that has been the case. And on Friday, you got a hint of what the price action could look like if you actually saw a resolution. So on Friday, you had yields lower. Gold popped on that. You had oil lower as well. And so I made a bet basically that if this deal is true this time, then that would continue. And so we're seeing that today. So we're seeing yields lower today. In the US, you're seeing oil down 4.5% now. So that's going to help this trade here. And so being early is okay, as long as you understand the fundamental drivers behind it and what it will look like. If I blindly bought gold, not knowing that, it's very sensitive to yields right now, then I'd be in trouble, because if yields start to spike, then I wouldn't know when to get out of this trade. But I understand that the dollar as well is getting softer. So that's why I bought gold prematurely without the edge finder reading.
Yep, I actually think this is a good level to get in. I was in, but stop loss was hit, so not gonna re-enter. I think like if you take away the whole situation in the Middle East, gold is bottoming out. So a lot of the weak hands have already been shaken out. There's still a lot of demand for gold coming out of China, and the central banks will switch to buying gold instead of selling it during a time of crisis like we have now. So that is going to be another sort of demand confluence right there. I think this is a really good level to get in, especially if you want to take a probe and kind of see how it goes. A small position, so makes sense. And you're shorting dollar Swiss. So what's the methodology behind that?
Same thing. So if you look at the Swiss franc here, we'll go to the economic data. Let's go to Eco Strength Index. You can see that it's really between, well, Japan's actually up here now too now. But it was the top ones are the US, Japan, and the Swiss franc. Now,
Yep.
I think that if you get the end to the war solidified or whatever the case is, what we're seeing today, the dollar weakens for the reasons that we already understand, which is the safe haven is getting priced out, rate hikes being priced out. So that makes a lot of sense there. So it's really just between trading the dollar against the next strongest thing, which would be in this case Japan or the Swiss franc. And if you go to Eco Strength Index here, you can see that here in real yield terms, you can see that the Swiss franc is up there as well, right below the dollar. And so that's kind of my thought process there. All right. And also too, the Swiss franc, similar to gold and silver, has been trading kind of like a risk currency. That alongside what we were seeing with the NASDAQ and gold and whatever, it makes a lot of sense. Edgefinder right now is getting a bearish reading as well, which gives me that confidence to stay in the trade. So dollar Swiss, you're getting a bearish reading of -5. And you can see that reflected here on the daily on today here. Just looking at today, you can see that the Swiss franc is the biggest winner of today, and the dollar is the weakest link. So that's why dollar Swiss.
Interesting. I don't understand at all why the Swiss is gaining value, but definitely great if you caught it. Euro Swiss, I'm not sure what the level is right now. Are you worried about a possible intervention if we reach close to 0.9 on Euro Swiss? Or is that something that you're leaving to the side?
Not on Euro Swiss. I know intervention probabilities increase once you get to like here on dollar Swiss here, like 0.76 is when they were getting verbal there. So we're a long way from that. So I have no really concern. I like to trade currencies with themes as well. So like we all know, if we want to trade currencies and have some exposure to oil, you would trade the Canadian dollar. If you want to trade currencies and have some exposure to risk, you would trade the Australian dollar or the Kiwi dollar. The Swiss franc actually, trades somewhat in sync with gold as well, and so that's another reason why I like the Swiss franc to the long side.
Yep, interesting. And would you be looking to add more positions this week, depending on the Fed, and let's say depending on if we get a confirmed resolution and like Iran confirms everything and we take care of the nuclear issue?
Oh, okay. So the deal and the trade just keeps moving in my direction.
Sorry, I think I cut out for a couple of seconds. If you can just repeat the last part.
You mean if Iran and the U.S. confirm the deal and the trades keep going in my direction?
Yep.
On the prop account, no. I'm pretty much. I have, I think, $600 worth of risk left in this. So if I do 600, I'm still in the green. Oops, no, not 600,000. Whoops. If I do, if I do 700, I'm tapped out there on risk. So I only have about $600 left on my prop account. So I really want to be adding to the position. On my live account, obviously I can do whatever I want there. Yep. I might add more to my dollar Swiss short position, if anything.
Okay, interesting. Does the Fed matter for you at all?
For sure. I'm very curious to see. I think if they were to like verbalize that they're willing to stay put for a long time, I think that's really strong for the dollar. If they starting to say, I'm sorry,
you think that's bullish for the dollar?
For the dollar, yeah, because on a relative basis, like the dollar interest rate is a lot higher than some other countries, like Europe, for example, or and stuff. The UK has its beat, the Australian dollar has its beat, but I think if you were to get them like hinting that like, oh, but look at core, right? Core is lowering a little bit, and that's what we need to pay attention for. If they starting to pick and choose like which inflation gauges they want to look at, obviously the ones that are going to be helping them in this situation there, as far as being dovish, I think that could be weak for the dollar. And so then at that point, I'll continue with my dollar Swiss short position and go long.
Okay, interesting.
How about you though?
Yeah.
Are you also like looking to add any positions or?
So I want to see the Fed. Definitely, I want to see the Fed. I want to see that dot plot. If it comes out dovish, I'm gonna have to reevaluate my whole view. But if it comes out neutral or hawkish, and let's say they say that they're planning to hold for a long time until they see better inflation prints, I think that could confirm my thesis of just going long on the dollar. So selling GU, buying USD CAD, selling NZD USD. I think those are my top picks at the moment. And then as far as equities go, and gold, I would have to see a confirmation of the resolution. So I would have to see an actual signing on the 19th, something along those lines to clear that situation up for me. Because right now, I don't think I have a huge edge of flipping to full risk on. I don't think it's the right move for me. I may be late to the party, but better be late than take some wrong decisions that don't fit the plan.
For sure. And by the way, I'm in full agreement there. Like these positions that have dollar Swiss and gold long are short term in nature. I think that nonetheless, like I'm trying to buy a dip on the dollar index, whether that's at 99.5 right now, where we are right now, and this level holds, then I get stopped out for break even or whatnot, and then repivot back into dollar longs, or I can continue my dollar shorts until we get into like 98.5 right there where the 200-day moving average is. And then I can repivot and go long dollar. But nonetheless, right now, my current bias, longer term, medium to long term, is that the dollar is going to be relative to the other central banks, the more restrictive one, or one of the more restrictive ones.
And I want to get your thoughts on SpaceX. So we had the print, we had the price. What do you think?
What is it doing right now? I haven't looked at it. Let's see.
I think it's up.
It's 170.
Pretty high.
Yeah, too early for me to participate. I would love to see, from a spectator's view, but I think right now that retail is just the exit liquidity for the guys that have been in this for 10 plus years.
Yep. And also, the unlocks happen. I think first one is in 90 days. So a lot of the holders are still locked, meaning they can't sell, and that's for a reason, because if they had the unlock, they would probably sell 50 or 60% of their holdings. So it's going to be interesting to see what happens in the next few months, because as the unlocks start to happen, I think the smart money would be crazy not to get some profits out of this.
Yeah, I know
Especially with those. Yeah, sorry.
I know Kathy Wood bought 500 billion, which is essentially half of a trillion. So half of that liquidity is gone. Like it's already been transferred over. So yeah, once that other 90 day window opens up, the other half a billion gets transferred over. But
Who is
yeah,
Kathy Wood?
Kathy Wood.
Is she an investor or
let me see.
is she like Jim Cramer?
What does she actually do? Let's see. She's a founder of an investment fund, but I think it's ARK Invest. She's very like ballsy in her investments. Like she a lot of her investments are like questionable. So she's very like that. But ARK Investments here, let me pull it up.
I thought she was like Jim Cramer, where he says something and then the opposite thing happens.
Oh no, this is her right here. ARK Investments, but she makes a lot of crazy investments. So we'll see what how this plays out.
Okay, interesting. Yeah, let's see the next few months with the unlocks. So maybe it goes down to the fair value. I think the fair value is around 97. But again, you have that Elon Musk factor where the fanboys, they just want to get in no matter the price, no matter what's happening. And they do have a lot of power. Just look at Tesla. So
they are definitely ride or die. So
Absolutely.
sometimes they throw away the logic to the side and they just try to fanboy into the in this case SpaceX. But Mark, I'll go ahead and leave you to it, man. For your portion of the segment, it was great. I'm excited for this week's FOMC. Hopefully we get some volatility and some more opportunities.
Yep. Good luck with the positions. This was a great segment and we will see each other tomorrow.
All right, man. Take it easy.
Yep. See you. Goodbye. So I want to mention, if you guys are looking to get funded, the sponsor of today's stream is Ola Prime. So Ola Prime, you can get 35% off with the code. So the code is A1 Live. Okay? 35% off Ola Prime. Hope this is not too small. Let's make it a bit bigger. Let's put 32. Yeah, this is it. So A1 Live, 35% off Ola Prime. Now, one thing that I like about them is the Trustpilot. So their score is pretty high. 4.5. I think in the prop firm space, that is really, really good. So a lot of reviews as well. I think that's a good sign right there. Reviewed by Deloitte. That's a plus. Not a deal breaker, but it's a plus. And I think they're a new prop firm. I usually say to people like go with the OGs like FTMO, but Ola Prime does seem to be very good, and they seem to be defending their reputation. The price is definitely much better than FTMO. So with our code, you get 35% off, and you get a really, really good price. The last thing, on some account types, they don't have the consistency rule, and the consistency rule, if you have traded with it, you know that it kind of kills swing traders. So that's definitely a big plus in my book. No consistency rule is always a big plus. So Alan says, I stand corrected. She bought 529 million, not billion. Okay, that's still a huge amount. So very interesting. And we're going to see how her investment pays off. Now, the trade that I was thinking to do before the SpaceX IPO was to sell a bit of Tesla, which obviously I didn't do and it wouldn't work. Let me just remove this 10 EMA. So my thinking was, you have a lot of Elon Musk fanboys. The best company, if you want to invest in Elon Musk, the best company would be SpaceX, in my opinion. That's his favorite company, his baby. If you read his biography, you would know that that's the first thing that he started. That's his passion. Okay, Tesla came in later, I think. Yeah, so he did PayPal, got a bunch of money, started SpaceX, failed, did Tesla, and then SpaceX worked in the background. So the money flow, I thought, was going to happen out of Tesla and into SpaceX. That didn't work. So obviously both companies appreciated on Friday and gapped up today. So good that I stayed out. Another sort of trade potential setup was to sell the NASDAQ because the extra supply coming for SpaceX. Now that wouldn't have worked either, because on Friday you had a bullish candle and we gapped up and the NASDAQ is close to all-time highs. So conclusion, anything connected to Elon Musk, very much hyped up, very tough to trade. Much better to look for longs rather than shorts. I'm sure there's some professional traders out there that did manage to find some quick short positions, but for me, sort of a guy on the internet trading mostly currencies, I shouldn't really go into the Elon Musk hype and try to short it. But if you look at one other interesting example, so if you look at the actual valuation of SpaceX, let's go to SpaceX. From this guy, so Ashwat Damodaran. Basically, if you studied finance in university, this guy probably wrote your textbook. He does valuations. He's kind of the guy for valuations. And if you look at the conclusion for this article, it's great if you want to read through it. Personally, I didn't read through the whole thing. I just went to the value per share. Okay, value per share, $97.83. That's kind of supposed to be the fair price. But with Elon Musk and with these kind of meme stocks, with stocks that are currently losing money. So let's go to SpaceX SPCX. SpaceX is currently operating at a net loss, but the future valuation, the forward projections are crazy high. So you're buying into the future. You're buying into the hype. Tough thing to trade. Anyways, my watch list for today. I have GU. I have a short position there. Now, I may get some questions. Marco, isn't the deal here? Isn't the war supposed to end on the 19th? The deal will be signed and your position will go to the stop loss. Why not take a small loss now rather than a full loss a bit later? Well, to be honest, I'm still very much confused. My motto, my trade plan is ignore the headlines, focus on the numbers, because the headlines are deceiving. If you go to Financial Juice, you have like 4 or 5 sources, and all of them are a little bit contradictory. So it's very, very tough to get a clear picture if you're looking at headlines. But if you look at numbers, it's very easy to make conclusions. You look at inflation, you look at the CPI, you look at the United States, 4.2%. Very high inflation, way above target. PPI, same thing. 6.5%, very high inflation, way above target. By the way, the PPI is usually the leader. The CPI is the follower. So if the PPI is printing at 6.5%, the CPI may print very, very high, very, very soon. So high inflation means the Fed is going to be more hawkish, means dollar goes up. So those are the numbers. That's the data. That's what I'm focusing on. That's how I'm basing my trading decisions. So holding my short position for now. By the way, if you want to get the Edge Finder or join the A1 Discord, get all of my trades and positions, you can use the code Marco to get 25% off. All of the links are in the description of the stream. So the code Marco gets you 25% off. I have used the JPY, which I'm looking for a possible intervention near the 161 level. So 160 has already been reached. If we take a look just a second here. So we hit 160. I think it's a bit premature to short at 160, but 161 does seem like a good clear level to sell. We already had an intervention when we hit 161 back in June and July 2024. So that was pretty nice. Okay. And I'm looking for the same thing. So the price action looks very similar as to 2024. This was the initial intervention. So we hit 160. We had the intervention. We then trickled up. And then we had the big one. We had a complete trend change at 161. And if you look at the current price, you had the initial intervention, then we trickled up, we hit 161 potentially, and then we could sell off once more. So that's the trade for UJ. Nikkei looks really good. Let me browse through the top setups. see what kind of a reading are we getting on the Nikkei and the Nasdaq. So Nikkei, let's see, neutral at the moment. What about the Nasdaq? Nasdaq is actually bullish. Okay. Now, do I want to buy right now? No. I would much prefer to get in near the 20 MA. Let me see the Nas. If we do pull back, and if the edge finder stays bullish, and if we get an actual signing of the deal, well, it's gonna be game on for me to enter, right? Maybe not on the Nas. I just think a lot of the confluences right now are pointing bearish for stocks. So I'm not exactly sure if I want to buy the Nas. I do like the Nikkei much more, if I'm being honest. So the Nikkei looks the best out of all of the indices. And if we do pull back to the 20, if we do get an edge finder bullish print, I think that could be nice to get in. So as you can see on this Monday, I'm a bit flat as my positioning goes. I'm only short on GU. I'm not looking to add on massive size. I'm looking for more information. I'm looking for more data, both on the Middle East stuff, and I'm looking for the Fed meeting. So what will the Fed say? Because at the end of the day, I told you I'm focusing on the numbers. The Fed is putting out numbers, putting out real projections, and that is going to be something that controls the markets. So let me just see if we have a guest coming on after me. Okay, we should have Tiger joining soon. I'm not sure if Tiger is in the background or not. So James, if you can tell me if Tiger is going to come on after me. But let's see. I can do 1 or 2 more minutes. That's pretty much the watch list. Metals. Okay, we have Tiger coming on. Nice. Metals. That's gonna be the last thing for me, and then I'm gonna give the show to the next guest. Gold is recovering quite nicely. Silver, copper looking nice as well. Platinum. I did have a buy position on gold, which I got taken out of. So the stop loss got hit. I'm not really looking to re-enter this position at the moment. I don't think that's the best way to go for me. This could be a nice bottom. That's why I had the original position. But yeah, for me, things are very much uncertain. And Edge Finder, if you take a look at the Edge Finder here, you put in gold, I think it's bearish. Yeah, so we're getting a bearish print on gold on the Edge Finder. If you want to get more of my thoughts, I think I'll be smarter tomorrow. So definitely join the segment tomorrow. I wish you guys good luck in the markets. Don't forget to join the A1 Discord. And in 30 seconds, you will get the next show host coming in, which is Tiger. So don't go anywhere. Thank you, and see you in the next one. Goodbye.
This next segment of the live stream is proudly sponsored by the one and only Ola Prime. Ola Prime is easily one of the most impressive prop firms that I've come across with an incredibly professional team. They offer fast payouts within 1 hour, up to 95% profit splits. They have the largest number of trading platforms. I mean, just take a look at this list. They have MetaTrader 4, MetaTrader 5, TradeLocker, DXTrade, MatchTrader, and CTrader all available to their traders. And that's just for the Forex side. On the futures side, they have DX Futures currently, with Tradeovate and NinjaTrader coming soon. Ola Prime has one of the widest selections for challenges and funded accounts that I've come across, with a wide range of account balances you can choose from, like 5 all the way to 200K. And just take a look at the variety of different challenges you can choose from to fit your trading style. They have a 1-step or 2-step pro accounts. They have the 1-step prime, 2-step prime, direct accounts, Ola Prime, 1 challenge. I mean, you have a wide selection here. And the reason this is so important is that you as a trader have a unique style. Everyone does. And finding the right challenge to meet your criteria is very important. If you go through their website, which I encourage you to do so using the link dropped in the live stream chat right now, you can explore in full transparency all of the different account types, all of the rules, etc. They also offer news trading and weekend holding, and they have direct and challenge accounts available. For a limited time, stream viewers get extra discounts using the promo code that you see on your screen right now, and also through the link and promo code being shared in the live stream chat. Take your trading to the next level with Ola Prime. Now back to the live stream.
What's going on, everybody? Happy Monday. Sorry about that, Marco. I was a little tardy getting on, busy with my calendar. Happy Monday, everybody. Yeah, for Olaf Prime for the discount, I wanted to clarify something, guys. We're getting something fixed on the code side of things. But once you do go onto their website and you log in or create an account here, it'll send you to the screen over here. There's 2 different slots for codes, and Nick's working with them as we speak to get this top section to work. But on that affiliate discount code, if you just put in the code right there, it should work for you. So I know 1 or 2 of you was asking about that earlier. Hopefully that clarifies it. So just for the time being, till we get the top one to work as well, just use the bottom one. It should work. So hope that helps you out there. And yeah, if we hear anything different, I'll report back to you guys, or one of us will, as far as tomorrow goes, or whenever we get that top section fixed. So code's good, just got to use the bottom one. So sorry about that confusion there. As far as today goes, guys, I got to be quite honest with you. I'm really just kind of focused mainly on Dow. I don't know. I don't know what you guys think, but I just feel like with this geopolitical drama unfolding and possibly getting this deal written, I'm a little bit weary of kind of going, of kind of following some of these just for the time being, talking about, buying the dollar against some of these pairs. There's a few ways to look at this. And I guess it's really up to everybody's individual thoughts, but I'm kind of steering clear of it for now just because of the geopolitics. That is obviously taking money out of the dollar into risk assets. So I'd be afraid personally of buying the dollar when it comes to like pound dollar shorts, euro dollar shorts, really all the Aussie dollar, New Zealand dollar, although some of them have fallen off the list, it looks like, but Kiwi dollar still on there. So, but yeah, I kind of did a little talk with Grok a little while ago, pasted in the top setups and got its thoughts. And yeah, it just sounds like for the time being, from what I'm gathering, it sounds like the geopolitics might actually win out for the moment. So I don't know. Just be careful on that. I'm going to definitely stick with the Dow, though, because that's obviously a risk asset, and that's where the money's flowing. So let's take a look at that. And as always, guys, let me know in the chat if you have any specific tickers you'd like to look at. Yeah, NASDAQ appears bullish too. Yep. Is it? Do I need to refresh my screen here? Let's see if anything changed. Guys, I turned my computer on about 6 in the morning, so sometimes I forget to reset it by the time things happen over here. Okay, there you go. Yeah, good call on that. Thanks a lot. Now we've got an updated list. So NASDAQ will definitely be on the list as well. Absolutely. Let's take a look at those two, Dow and the NASI, and see what we can come up with. Let's go find my CFDs up here. Obviously the Dow, which was the one that was already on the list. So with the Dow, we've actually broken through that 4-hour supply zone that I was telling you about. And I got to be honest, I'm a little bit annoyed with the Dow because I drew up this zone of demand down here, about a week and a half, 2 weeks ago, something like that. And about the time that price started dropping into the zone, that's where it kind of went to neutral for a while. Only to show up very shortly after back on the bullish list. So as it entered this demand zone, it was at a +4, a +3. So I ignored it, but it just goes to show you that even sometimes with the way these fundamentals can shift under our feet, the demand, the unfilled orders can still win out. Because as you can see, it just clearly dropped in. We collected unfilled orders, had a lot of trading activity taking place down here, and off to the races it went. So take profit, just like I drew up here. Well, actually, it would have been a little lower because I would have taken the sell just ahead of the supply zone. But anyway, as you can see, gapped up, Sunday gap up here in the States, Monday morning for you guys across the pond. And now we're in a new section. So all-time highs, as you can tell. If we go back, oh, look, I got my little spaceship over here. That was something I was messing with on another old stream from a year and a half ago. That's funny. I didn't even know that was still up there. But yeah, we got all-time highs now and just looking for a discount. You know, with this supply zone getting tested and cut through, could this give us a flip zone, a flip demand zone? Well, I would personally like to see it go a little bit higher up first before a retracement, kind of that break retest idea. This is a 4-hour chart. So, you know, I'd like to see it just go a little bit higher and then maybe a retracement. See if we could find a zone in here on a smaller time frame for possible. I don't want to push it that high, but, you know, just try to steal a few pips out of this. mean, at the end of the day, it's at the most expensive prices it's seen in its history. So 4 hour, 1 hour, I don't know. Do we have anything down here? We got a couple yellow candles on these last 2 candles out, but as far as volume spread analysis, yeah, I see there's just not enough daylight. That's why I say I need to see price move up a little higher first. I mean, we're all the way down to a 1 hour chart. You can see where the volume's really kicking in after we broke that structure. Again, the all-time highs. So in this area, so far, I don't know. Maybe that 10-minute zone. But again, I wouldn't be interested in this for a 10-minute zone unless we climb higher up in this area before possible retracements. That might be a shorter term intraday style trade too. But as far as the higher time frame stuff, like I prefer, there's just nothing really exciting in the area. I mean, these indices have, while they have had a very strong move up, the candles have just been pretty narrow. Okay. So it's not like I've seen any super super-strong movement unless we drop all the way back down to this 51,000 area, in which case I think there was a 15-minute zone hiding in there. Yeah. So this could possibly be a smaller time frame vibe down here for a bullish move. So I'll go ahead and draw that in. If it shows us enough temporary weakness to get down there. I mean, I got my alert still down here on this. What was that, a 4 hour? I think it was. Yeah. The 4 hour. So that was the first zone that formed after we bounced off this area back here. So, depending if we can get some type of short-term weakness, tell you what I'm actually going to do. I'm going to move my alert up here to this 15-minute zone. So it's a smaller time frame. It's not my favorite, but perhaps a small stab at this area. And if this fails, then I'll just likely put an alert back at that zone at the bottom that we just took it away from. So yeah, that's kind of what I'm looking at, 50,800 to 50,900 range. The zone did break some structure right here, which gave us all-time highs at that point in time. But there was already kind of a move off of this demand right here. So we had a lot of volume spread analysis activity, a lot of tick volume that happened here. So this was a demand zone for the time being. As you can see, it caught a bid and pushed up, made those new all-time highs. So that's probably what I'll be keeping an eye on. The one thing I dislike, you guys might know this from hearing me in the past, I don't like this fair market value area over here that could possibly just act like a magnet, suck it in for a while. So I don't know. We'll keep an eye on this area here. But again, if this fails, going to go back to the higher time frame, higher confidence zone that's a little deeper down. So that's what I'm looking at personally for the Dow. Did we get Nikkei on the list? I don't see Nikkei. Do I need to refresh it again? We'll take a look at the NASDAQ next here, see if we have any zones of demand to take a look at. Again, money's flowing out of the dollar into some of these risk assets. So let's go look at the NASDAQ and see what we got. I don't even need to worry about looking at the daily because I know that the higher highs are there, moving averages. As far as confirmation, mechanical confirmation, if we kind of zoom in, we can see the mouth opening up to the upside again. We had that, obviously, that temporary pullback, but now we've got the alligator's mouth opening up. So there you go. There's my higher time frame mechanical confluence. And I'm going to make this, I'm going to have to see a break of structure, guys. We had higher highs and higher lows. This you could call a low, right? A higher low, but then we had a lower low, right? So is it possible this could turn into a supply and give us a lower high? Probably not. I think I'm just going to this is going to have to do the same thing Dow just did. Jump through a hoop for me and break structure to the upside. Get that new all-time high look and then a retracement. Just like what I laid out for the Dow. If that's the case, then what about zones? We got any 4-hour zones over here we can take a look at? I'll go back to a one chart look. Okay, 4-hour demand. We got one here. What about the leg out? Did we get any real strong volume? We had a yellow candle, but it was a little less than the basing structure. So I don't want to say that's a red flag, but I wished it would have been the other way around. We'll still draw this in as a demand and dig a little deeper. What's 4 divided by 4? It's 1 hour. Do I have a 1 hour confluence? Do I have a second set of eyeballs besides the 4-hour traders? Looks like I do have a 1 hour candle here, a little bit of a gap above it. So I got two gaps. There's a 4 hour and a 1 hour gap with some decent volume out. This would be the 1 hour leg out, and we've got a little bit bigger of a yellow 1 hour volume spread analysis candle. So looks like we had a lot of trading activity taking place. Could this have been a spot for some accumulation from the banks and the institutions to push price up and break that structure? We'll have to see. But I just need more information. I need to see it break the structure for me to be happy about it. Break the high point and then retrace. That's what I would personally be looking at for the NASI. As always, guys, not financial advice. Just telling you what I'm looking at based off of the structure I want to see. I just want to see that higher time frame structure. Remember, it takes a lot of money, a lot of money to break structures, to break supply zones. So if it does that, then that'll basically prove this strength down here, in my opinion, just because, again, this is the origin of the strong move up. And the inefficiency in the market really starts right there with this gap. Here to here. There's our 4 hour gap. That's our acceleration gap. Okay. So that's what I'm looking at. Basically the 29,000 area for the NASI. All right. What about the S&P, since we're looking at the indices? Again, it doesn't look like it's quite on the list yet. But if it does, do we have a demand over here as well? I can tell you right now, I would probably stick with one of these two, since those are the ones that are, well, the Dow is actually the one I do believe was showing us the stronger look. Is that right? Go back over here. Yeah. Oh, they're tied, +6. So, okay. So if S&P happens to give us a bullish look, it's going to be a very similar picture. 4 hour zone down here at the bottom. I'm sure there's probably a 1 hour gap as well. So it's basically a clone of the NASDAQ like we just saw. But the benefit to the Dow is it has broken the structure. I just need it to close up here. Okay. So that's my plan, is the Dow above the NASDAQ, and especially above the S&P, since it's not even on the list yet. Oh, what we got on the chat over here? Short in Q, says Rumo. Are you stopping a rocket ship? What we got on the NQ? I know this is a FX channel, but see what you got up here. You had a daily supply for a minute, but then it chewed through it. So just be careful, because remember, even though we don't have a signed dry ink deal, which we probably won't see anyway because it's electronic signature from the sound of it, it's going to be putting a lot of money into the risk assets. So just be careful with shorting, trying to stop a rocket ship to the upside. Okay. Be careful. Hopefully you got a decent stop on it. Hopefully you're not selling the farm on this trade. I know I wouldn't want to do it. I mean, your only possible saving grace is if the high point here can act as a overhead resistance and push you down. But we've already blown through the unfilled orders. See, that's the downfall of that short. So do what you want. Just be careful with it, because so far the structure is not really looking great. Okay. All right. Back to the FX and otherwise. The other thing that hit my zones, so I had pound dollar and I also had gold hit my supply. I told you guys about the 2 hour supply over here I was watching. We've already got a wick into it. The second set of eyeballs would be 2 hours divided by 4. It'd be 30 minutes, right? And if I go to my 30 minutes, you can see my zone is a little bit higher up. It's not on the proximal line of the 2 hour. It's basically about the middle of it. But again, I'm just a little afraid to be shorting this thing and buying dollar strength when the dollar's clearly having money leave the dollar and go into these other assets. So, yeah, that's where I'm at, guys. Dow and NASDAQ. Thanks for letting me know NASDAQ was on the list. That's really it. So what else you guys got? Let me know. You did point out Nikkei, and I don't see it on the list, but we'll have a look at it from a technical aspect anyway. And then we'll go to gold and silver next. Nikkei. There you are. JP 225 USD. Having a look at the technicals. This thing's been flying along with the US equities as well. Broken that structure. So much like Dow, this has broken that structure to the upside. I like that. Looks like I got a daily demand. I just don't really think I like the wick going this far down. So definitely would have to dig deeper into a smaller time frame to find something a little tighter. But by definition, that does create a daily demand right here. I just don't like that big wick right there. So let's go dig a little deeper into this thing on a 4-hour, see what we got. Okay, the true bottom where this wick is giving us a 4-hour demand. So there we go. We got a little bit of a confluence over here at the origin of this strong move up. Let's get this colored green so we can see the difference. And that would be the technical look. Now, again, I need the fundamentals to line up. But yeah, you can't argue with the technicals. I mean, it's right there with the Dow as far as the prettiest. If we're just looking at some of these immediate indices here, because again, S&P and NASDAQ thus far have not broken the swing high up here. So that's my hiccup, or that's my hesitation on those two. But Dow and the Nikkei, technically, yeah, they look great. Got some great technical spots. If we can get anything bullish out of the Nikkei, that could be on the list. I don't know. Let's go have a look, see where the Nikkei actually is. Put on the neutral items here. Nikkei. Where are you at, Nikkei? Come on, zoom, scroller. Sometimes my scroll button hangs up, and I haven't figured out why. It's kind of a pain in the butt. Nikkei, 0. So it's straight up 0. It's not really getting a good look. So the inflation data is holding it back, it looks like. Same thing with the crowd. They're actually on the right side of it for the moment. So just be careful with the Nikkei, because fundamentally, sentiment-wise, not really giving us the greatest signal at the moment. And, well, yeah, technicals are, again, look good. But remember, we don't just trade based off of a chart, right? We have to have a why, and we have to have some confirmation, which is our sentiment analysis. So just be careful with that. Go back to our actual list over here, see what we got. Now, if this falls apart, again, we don't have a signed deal yet. If something falls apart, yeah, I'm absolutely back on the pound dollar short, euro dollar short train, silver and gold as well. Silver and gold probably won't be affected as much, but, probably a little more sideways type action. But as far as the technical side of it, it's bounced into this zone right now. But again, when the geopolitics kind of came out over the weekend, that kind of threw a wrench in this short opportunity, in my opinion. And as you can see, we've already chewed through this bottom daily supply and the 4-hour confluence, right? So we've already chewed through that. And we haven't closed above it, but point is, it's just not given. I just don't like it. If anything, I think I'd want to wait for this higher up supply zone confluence a little higher up. And that's why I've moved and put a new alert here at 44.28. Because, hey, at the end of the day, these things have to breathe. And even though this is good, positive news for some of these risk assets, not saying gold and silver, but just in general, it's still got to breathe. So a little bit of retracement, and I could still see a possible short up here, right here at that 4,400 level. I just wasn't too excited about taking. The only reason that I even paid attention to this zone, period, is because that's where it based the last time before it broke and closed below that March 23rd low. Okay, daily break and close. That was the last point, the last higher time frame basing area before it did that. So, if this was the start of last week where we didn't have any agreement yet on the deal, absolutely would have probably been interested in taking this short. But the geopolitics at the moment, at least in the near term, are just saying, But push up a little higher, get a little bit more expensive of a price, then maybe. Because about that time, the 200 EMA for the 4-hour chart will start piercing into this supply zone. So maybe we'll have a trade at that point. That's kind of my thoughts anyway. Oil. I wanted to point out oil because we're currently in this weak demand zone I drew up over here. I say weak because, and I can't remember if I mentioned this to you guys or not, but when we got this basing structure, when we got our leg out, there was no volume, number one. Number two is we didn't have a great momentum. If I draw up the momentum of what I would have personally wanted to see, I would have wanted to see at least a break of this structure right here, guys. A break and then a retest. But now the deal, again, is throwing a wrench into this. As you can see, we got a gap down. If we didn't have a deal, that might have been a decent place to buy. But again, there was no momentum and there was no volume. So that ixnays that 4-hour zone of demand. By definition, it is a zone. By definition, it gave us a gap. But the geopolitics have turned around. So if we break and close below this 4-hour zone, I don't see why we don't drop to 67, 68. Because I think that's the nearest decent looking demand area, much further down. That's just my thoughts on this. We obviously broke out of this coil in action that I kind of drew up here. I was telling you guys about higher lows here, lower highs up here. We finally broke it. So it's just a matter of if we're going to pierce and close below this weak 4-hour demand zone. If we do, sayonara. Wouldn't surprise me at all to visit 67, 68. That's just my thinking on here, okay? I could be wrong. I could be dead wrong, but if I'm just looking at the technicals for the moment, because the fundamentals aren't really helping us out. We're not really getting a good look at all on the fundamentals. In fact, what is oil giving us? What is oil giving us right now? I think it's still pretty well, yeah, +1. So it's about as neutral gets. Inflation isn't really helping it. Some unemployment claim, yeah, it's just a little bit too mixed. Bearish trend, obviously. Bunch of zeros up there. I'm just not feeling it. Not feeling oil. And I don't want to short it either because it's just too neutral. So that'll have a lot to do with it. I tell you what, if we do get this break and close, then I don't know. Do we have a 4-hour supply zone to look at? Nothing really right here. This is too wicky. Yeah, I bet the closest thing would be up here. We did have a decent leg out. Again, the momentum took a little bit longer to break this structure right here. This structure here, guys. The first leg out was awesome. If we would have had a second candle like this coming out, yeah, this supply zone would be on the table. But the momentum failed. Because after that strong push out, we based before dropping, but it was on weak volume. Okay? Remember, volume is everything. Volume, effort has to match result. Effort didn't match result right here. Structurally, it did, but just not as quick of a momentum move as I wanted to see it. And yeah, low volume. So I just don't have a play overall. Okay. Even if they sign the deal right now, they kiss and make up. I still wouldn't really feel that strong about that supply zone. It's just not the greatest. So might have to just have some new zone create itself. I mean, at the end of the day, we are in a demand zone. So if we can get like a really strong basing structure with a strong drop for a couple candles with a lot of volume, then that would turn this into a flip zone, a flip supply zone, right? Former demand zone flipped into a supply zone. So that's what I need to see. It's an incomplete picture right now. I'd like to see him kiss and make it. Probably won't. I think. So that's what I wonder, because I saw President Trump was going for the G7 summit. Is he just going to stay there and go to Switzerland and sign the deal? I didn't quite see all that detail this morning when I was doing my digging. You figure he's over there. He might as well. But either way, we'll see. We'll see what happens. Bitcoin is still kind of bouncing off the bottom part of this mitigated monthly, weekly, daily demand zone confluence I was telling you guys about. Remember, we hit that thing back in the I should say the early part of February. We got about halfway through it. And normally if a zone gets pierced halfway, guys, I don't know that I really trust the bottom half, but it's kind of hard to argue against a confluence of daily, weekly being the same distal line, okay? And then not to mention the monthly demand. So as you can see, we've gotten a bounce from it with a big candle. Talking about this big yellow candle right here. Look how big that is. That's when we dropped into the bottom half. Unfilled orders, okay? There was a lot of unfilled orders right there for the daily and the weekly and then the monthly. And now we're getting another push up. So this isn't up enough yet for me to be bullish about it. I mean, obviously we don't have a good score yet on the edge finder. But if we somehow do, okay, because this is similar to the indices as far as a risk asset, well, I just want to see a break of structure of this supply zone right here. I want to see a break of this structure and close, and then maybe we could utilize this 4-hour demand as a possible entry. right here. It's a zone that was formed just underneath a former resistance. Former resistance here. Resistance turns support. Right at the top of a demand. I like that. I love the gap this thing left. Look at that. Pretty nice gap. Would you agree? Nice little acceleration gap to the upside. You did have one hang up right here, but it was on low volume. Okay, and that was also like late at night on a Sunday. So I'm not too worried about that candle. These were some pretty decent candles. So this just needs to complete the picture. For me personally to want to buy demand, this demand has to prove it's strong enough to break structure, break supply. Takes a lot of money to do that. The leg out candle was a yellow candle. It wasn't the best, but it could be made up for by this break of structure close. Okay? If it does that, I'll be interested in that 64,190 area. So again, not financial advice. That's just what I'm looking at. Let's see. Oh my goodness. Gosh, time flies, guys. Time flies. So anyway, yeah, just to sum it up before I get up out of here. It's all about the Dow #1 and the NASI #2. That's really what I'm watching right now. Because again, the geopolitics for me personally, and it's different for all of us, guys. Okay. Different for all of us, but just the way I'm looking at it, I'm just being careful with the geopolitics. But at least the Dow and the NASI do follow the geopolitics for risk on behavior. So with that, ladies and gents, hope you have a wonderful day. Stay safe. Hope that Ola Prime showing you guys the website helped out. If anything else, just rewind it, watch that a piece again. Yeah, take care. We'll be back same time tomorrow. Cheers, everybody.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.